Dear members, we welcome you for this seminar, and as per our election code of conduct, I think we follow those procedures. So, on behalf of SIRC of ICAI, I hope this session today will be fruitful and you'll be able to enjoy, and we will be able to do the best coverage on those topics. So I welcome the chief guests and the resource persons who are present here. I kindly request Vinay Thyagaraj sir, who will be the resource person for today, and the other resource person, Sujatha, I think she is available. Welcome back. Yeah, I welcome you to the dais, please. And I welcome Kannada Sabhavati sir, additional director there also on the dais, please. Kindly. Sachin sir and
Suhail, Ahmed.
The other resource person that we are having today is Sachin Kumar sir. We request you to the dais, please. And Suhail Ahmed sir, we request you to be there on the dais. Welcome sir, we'll start this program with our motto song and title.
सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 पुरुषो निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता
We continue with the Tamil Thyagaraj thoughts. On behalf of the Institute of Chartered Accountants of India, it is our proud moment that ICAI is going to be hosting the World Forum of Accountants at New Delhi on 31st January to 2nd February. So, on behalf of the Institute, we are hereby requested that it is made aware to all members across the country so that you can effectively take part in this forum. So we'll be playing a small promotional video. We'll try to make it quick. And I think we'll start.
Arthashastram, Dharmashastram cha. We, economic principles, Arth, and ethical considerations, Dharma, which are central to the work of accountants. The entire world is deliberating about the impact of climate change coupled with disruptions of artificial intelligence. India has given philosophy of Vasudhaiva Kutumbakam to the world and successfully hosted G20 summit on this theme and also launched Global Biofuels Alliance. The accounting profession also has an enormous responsibility to guide the work, where accountability meets innovation so that vision can be converted into solution. The Institute of Chartered Accountants of India, being the world's largest accounting body after the successful hosting of WCOA 2022 and GLOBAC, proudly presents before the world World Forum of Accountants 2025. Where accountability meets innovation for a sustainable planet. The world's brightest minds will exchange insights, explore emerging trends, and unlock the possibilities for the profession. Where foundation will be laid to shape the vision for the future of accounting profession. Hosted at Yashobhoomi, the largest convention and exhibition center in the heart of India's capital, New Delhi, inaugurated by the Honorable Prime Minister Shri Narendra Modi, is all set to host the congregation of accountants from around the world. And while you're here, experience the vibrant culture and heritage of New Delhi, a city where history meets modernity, offering unforgettable memories.
World Forum of Accountants, an experience of 3 days, insightful discussion, groundbreaking innovations, and unparalleled networking opportunities.
With immense pride, we invite you to WOFA 2025, taking place, happening from January 31st to February 2nd, 2025, at the magnificent Yashobhoomi, New Delhi. Experience 3 days of insightful discussions, groundbreaking innovations, and unparalleled networking opportunities. World Forum of Accountants 2025 is where you need to be, where accountability meets innovation, AI for a sustainable planet. Join us at WOFA 2025 from January 31st to February 2nd, 2025 at Yashobhoomi, New Delhi. For more details, visit wofa.icai.org.
So, I welcome Thyagaraj to give the welcome address. Welcome.
Thank you, Sandhika Madam. Very good morning to one and all. Little more voice. Thank you. So, it's my privilege and honor to stand before you, and this comes once in a 3 years when the elections code of conduct is here, and it's my privilege, and welcome all of you to this one-day seminar on the real estate. I appreciate each one of you being here on this Saturday morning, that to second Saturday, and also the filing of due date have been extended second time, right? Without asking. Earlier we used to ask, they were not giving that. That time also it's a struggle. Now we are not asking, they are not allowing us to enjoy our other than the professional work also. So this is the second time they are extending. I think next week 15th is a due date for extended filing of the tax returns. I am sure that 1% of our clients always give the more credibility, more responsibility to a last due date. That's how it all our profession is all about. In spite of that, you being here in Saturday, second Saturday, and it's a privilege and also it's a honor to all the speakers here to share some of our experience over the last few years of our practice. I welcome the chief guest for the day, Sri Kannada Sabhapati sir, Additional Director, Tamil Nadu RERA, and we requested Tamil Nadu RERA Chairman Shivdas Menon sir to be here with us to share some of his insights. However, due to his some of the emergency requirement, he could not make it. In his place, we have Additional Director sir has a rich and large experience in terms of being in the industry of the town planner. I will share more about him in terms of his experience and how and what it means for a chartered accountant now, chartered accountants in terms of the real estate. Before that, I just wanted to give a little more about the one-day session seminar on the real estate. Probably this could be the one kind of a seminar on the real estate. Generally, industry-wise seminar happens very less, where it covers all aspects, all facets of the subjects related to the industry. How many of you attended industry-wise program where it covers GST, income tax, industry specific? Have you remember any industry-wise programs happens? Like IT industry, food industry, software industry, right? But this is the only industry where we recognize it very much important for us to know the 360 degree of this. The reason is this is so dynamic, so innovative, so aggressive, and we could not understand whatever we learn, whatever we know. Even after you spending whole day, end of day, your confusion will be more rather than you get the clarity. At least you will be in a better place. Okay, ignorance is not a bliss always. Okay, so that is why we have having this one day full day seminar on the real estate, covering the important aspect of the real estate industry, the income tax, the GST, the Real Estate Regulatory Act, Regulation Development Act being the regulator to the industry, and also the related to the apartment ownership, especially the Resident Welfare Association, because the individual community started living together in an apartment or a group wise in a community living. It's very important how do we manage, what is the responsibility and what is the law, what is the statute behind it. So that is what is also, one is the knowledge wise, second is the practice, second is the professional opportunity in that. So this is what is we have tried to cover. But one day is too less to know about these things. Probably our speakers will put their best effort in terms of sharing what is really required for you to start thinking and start practicing on this. There's a full day program on the real estate, and we have all the speakers here except the GST. They will be starting joining the second half. So before we proceed, I would like to all the speakers to join, chief guest and the speakers to join for the lighting the lamp. Then we'll proceed with the introduction and also the formalities. So please.
Shuklam Brahma Vichara Parama Madhyam Jagat Vyapini Veena Pustakadharini Mabhayadam Jadyantakarapaha Vidadhatim Padmasame Samsthitam Vandetam Parameshwarim Bhagavatim Buddhipradam Shagatam Artikamalekam Vidadhatim Padmasame Samsthitam Vandetam Parameshwarim Bhagavatim Buddhipradam Shagatam Shuklam Brahma Vichara Sara Paramam Madhyam Jagat Vyapini Veena Pustakadharini Mabhayadam Jadyantakarapaha हस्ते स्फाटिकमालिकां विदधती पद्मासने संस्थिताम् वन्दे तां परमेश्वरीं भगवतीं बुद्धिप्रदां शारदाम्।
Thank you. About the chief guest for the day, Shri Thyagaraj Sabhapati sir, Chief Planner, retired from CMDA. I know that, hope you all know that CMDA is a planning authority or a development authority for developing the Chennai Metro and Chennai Metropolitan City. So Thyagaraj Sabhapati was retired as a chief planner. Prior to that, he was part of the senior planner in the CMDA and also the deputy planner, urban development specialist. Probably sir has seen the development of the Chennai, north to south, west to east, he was there from the 2000 to 2019, about 20 years. I am sure that most of you have seen how was the Chennai and how is Chennai now. Sir is one of the part of the planner as part of the Chennai growth. Prior to that, sir was part of the Urban Finance and Infrastructure Development Corporation. Also, prior to that, almost sir career is most in the CMDA, and also sir is good to be known as the part of the IASC, Indian Institute of Science, Bangalore, studied about hydraulics department. Prior to that, sir was a professor and a lecturer in the SP University, Tirupati, and Anna University, and sir is basically a BE Civil from Madurai Kamaraj University in the 1983. So this is a vast experience of today's chief guest. On behalf of SIRC of ICAI and the present member here, sir, we welcome to this one-day seminar on the real estate. I request CA.Sunil Jain to hand over a memento and a shawl. I request all the speakers on the dais to join and felicitate today's chief guest. A small memento from the Institute for a token of our love and appreciation and a further remembrance. Thank you. Thank you, Suhail sir. Friends, you know that real estate play a very vital role in everybody's life, and including the development and growth of the economy and the country, and the Prime Minister's vision of providing a shelter for everybody, that also a PMAY and various other aspects which propel the real estate. I am sure that we are always fascinated about the real estate. When we have a single bedroom, we want a two bedroom to 3 bedroom. Our children require beyond that, and post-COVID we need a office cum residence, a separate study room for the children. Always it keep changing depending on the requirement and also change in the technology as well as our requirement. And real estate is one which is ever growing. I don't think anybody has experienced this industry will not be there after some years. We have seen many industries has come, many industries has gone, but this is the one industry which always on the upside and the growth, and which will not, what I can say is, make us to feel this not exist. As a professionals, we play a very important role in terms of advising the clients. When I say that, it is not only my client, even probably the various stakeholders which is involved in terms of doing this real estate. Start with the land developers, land owners, developers, builders, bankers, housing loan companies, buyers, agents, brokers, channel partners, vendors, government department like a GST, income tax, and the labor department who collect, and also a planning department like CMDA and town and country planning, DTCP. Everybody play a very important role in part of this real estate. Everybody has their own share of their revenue out of this industry. A survey says that the largest beneficiary of a real estate is whom? Can you guess? Who is the largest beneficiary of a real estate?
Politicians.
Huh? Politicians, then? Government. Government is the largest beneficiary of a real estate because 40 to 45% of the revenue, not the profits, will be taken by the government, starting from the central government, state government, local authorities, plan sanctioning authorities, electricity companies, water boards. So various authorities taken about 45% of the total revenue of the any real estate project. A customer pays of a lakh rupees, 45,000 rupees goes to all this. So government don't want this industry to dry down or scale down. Always this department, always the government wanted this industry should be always on high. So that is one of the intention. Second largest industry after agriculture, first largest in terms of the revenue and also government collection. First largest industry, probably second largest industry after the agriculture for employment, whether skilled or unskilled. So these are all the various statistics which say that this industry will always be on a glorious side, and it's very important as a professions to know about the news, what is the inside of this industry, how it impacts not only the end user buyers but entire stakeholders of this industry. So this in today's seminar we look into the various aspects of it. Over and above everything, the RERA, the Real Estate Regulation and Development Act, the regulator to this industry at this point of time, it's a 7-year-old minus the COVID period of 2 to 3 years impact, and pre-COVID the initial stages of RERA is the beginning of RERA. Remove that, probably the importance and also the respect for RERA has come post-COVID. That too, whenever everybody wanted a shelter. During the COVID, we experienced only one thing: myself, my family, and my house. So post-COVID, that has given a much importance to this. So the RERA play a very important and a larger role in terms of keeping every stakeholder happy and accountable, responsible for their promises and the words. Not only the builder and developer, including the government agencies, because the largest litigation is always the government. So they don't give the permission in time, they don't end up being accountable for various aspects of their work. That has a burden on the industry, that has a burden which is passed on to the end users like customers and buyers. So in today's seminar, we will look into the importance of all these things and how RERA has changed the overview and also the experience of the real estate industry. We listen that from the today's chief guest, Sri Kanaga Sabhapati sir, in terms of RERA, how RERA, and also what is the importance of RERA for a professionals. It is not only the law and the act, how as a chartered accountant, how it is benefit to me personally as a professional, what is the responsibility as a chartered accountant I'm there in terms of the industry itself. So these are the things which would be deliberated in today's session, and I request the chief guest Kanaga Sabhapati sir to give some of his views and also the address to the professionals. Thank you.
Good morning to everyone. I am very glad and delighted to be here amidst of chartered accountants for the one-day seminar organized by the Southern India Regional Council of the ICAI. Actually, as presented by the introducer himself, the real estate is an important sector contributing to the economy of the country, but also impacting a million of lives. Actually, as he told, the agriculture is the predominant sector, but next to that it comes to real estate, and it employs about 18% of the employable people in the country. So it's a major sector contributing to the economy of the country. Also, I'm happy to see that this program is organized for chartered accountants, especially about the Tamil Nadu RERA Act and related provisions, which includes the major sectors, that is the planning and the development related sectors are from planning acts, and legal sides, the RERA Act itself, and the rules and regulations framed under the Act. And there's also the sector, major sector of accounting, which coordinates and guides the development of the industry in a major way. So I am very happy to see that other related topics of income tax, GST, and resident welfare association, which is the major impact on the RERA Act. There, in fact, many complaints come from the resident welfare association as well as individual home buyers. Prior to formation of this Act, introduction of this Act by Government of India, they have to run from pillar to post from consumer courts and consumer forums to get relief. Now, this process has been simplified after the formation of Tamil Nadu RERA for the state, and we have registered the projects in a very large numbers next to Maharashtra, which is also the largest urbanized state. It's about 30,000 projects that we have registered, and this will benefit lots of home buyers and plot purchasers in a big way, without going to the nitty issues of legal issues. Because previously there were no supporters to support this group of people. And here, now I have come because of the absence of Mr. Subdas Minasa, who is chairperson of Tamil Nadu RERA, and who had been the Chief Secretary of the Government of Tamil Nadu also before coming to RERA. And related to Tamil Nadu RERA, you might be knowing the Act was formulated in the year 2016, and rules were framed for Tamil Nadu RERA, and office was formed in the year 2017, and the regulations to get the actions were framed in the year 2018. And as told by the introducer, for the past 7 years, there were 2 COVID years. In spite of that, lot of developments have been being registered under RERA. And we have made the utilization of the computerization in a big way, advantageously, and all the projects are being registered online by the promoters, layouts and buildings, land and building projects can be very simple. It's a very simple process. Very few documents have to be uploaded, and the fees is accepted online. And we take maximum of 30 days to register the project. Earlier, this was done even manually, and we could manage a lot of projects cleared within 30 days. In very few projects where there's a requirement of certain documents, it got slightly extended, and we saw to it that every project applied got registered under Tamil Nadu RERA, so that it is beneficial to the purchasers. And especially for chartered accountants, as I told already, the work is very large relating to the compliance of laws relating to RERA and auditing of their accounts and advising them on the project streamlining. All this role is there from beginning to the end. We receive quarterly progress report of every project and upload it in our website. It's available. Tamil Nadu Real Estate Regulatory Authority website is available with all information of the project registered under RERA. While giving their progress report, they are supposed to get a certificate from the chartered accountant that the project, the registered project, has received so many amount in during the quarter, as well as till the quarter, or how much they have collected from the prospective buyers, and how much they spent on the project, and what is the stage of project physically on ground. These details are available on the website itself to see. And we are still hoping to improve the presentation and other aspects, and we are frequently calling the promoters when there is a delay or problem, and sort out with them, discussing with them while giving extension what is the reason. Mostly we advise them not to come for extensions for registration, so that they complete quickly. Whoever delays, penalty is being levied, and now communication is being sent by RERA that the penalties in future will be made heavy, so that nobody is encouraged to delay the project. Only if there is a need, they have to come for registration and collect the money from the purchasers and complete the project systematically within the time frame. That is the expectation of the RERA. Actually, chartered accountants are expected to certify based on the engineer certificates and the chartered accountant certificate. While withdrawing the money from bank, they will certify the development has actually happened, and they are eligible to withdraw the proportionate money from the RERA accountant. Dedicated RERA accountant has been proposed for the purpose, and they will be able to clear the amount only based on chartered accountant certificates. And while there are disputes from among the builders as well as purchasers, there are dispute, as I already mentioned, there are disputed redressal mechanism available within RERA with the court powers of the court, as well as Tamil Nadu Real Estate Tribunal is available, which is functioning in the same premises. Cases can be registered by the tribunal, and they hear the parties and give the remedy to the buyers. Mostly this is supporting the purchasers who had so far no forum to approach. As I already told, we have registered the projects in the entire Tamil Nadu, through the Tamil Nadu, about 30,000 projects. Also, we are registering, having a system of registration of agents, about 3,000 agents, which includes 2,500 agency firms who register under RERA, who can guide and support the purchasers. But this is not used effectively, and we will be studying and proposing a system of using their services also effectively. And as I told, I have been having a very limited knowledge on accounts. While studying, we might have studied subjects like business strategies, something while studying management, W&D, bookkeeping. Also, while I worked for municipal administration, which covered the 1 or 2 municipalities at the time within Tamil Nadu state, to introduce the accrual-based accounting system. There was a accounting specialist. He was there as urban development specialist, guiding them to the development of cities and towns in the infrastructure sector. After studying their strengths and weaknesses, we use the services of consultants. Also, the World Bank part. In the World Bank part, the accounting system was introduced with the consultants throughout the state. We could see the lot of improvements in the accounting system of the local bodies, especially urban local bodies, corporations and the municipalities. Because of this has been made possible from the year 2002-3 itself. So, the computerization of all the local bodies, even now in Tamil Nadu we can see, even in a village panchayat, we have a system of reporting with the computers, which may not be there in many other states. We should thank the World Bank and their support for especially municipalities and corporations. They came to Tamil Nadu. In that project, I was also a part of it. Then we extended the services to the town panchayats, which were in large numbers, with the World Bank support. Taking these learnings, Tamil Nadu government have extended the services to even the village panchayats. So, entire Tamil Nadu has a good system, and this helps us even in Tamil Nadu RERA now to obtain their certificates online. And I should thank the Institute for having given me the opportunity of presenting as a speaker. And we have the exemplary speakers on the dais who will be discussing with you on various topics of the seminar, which I should appreciate and thank for as audience. You have come forward to attend the program as well as discuss with them the various topics which will be useful in the future course. Thank you very much. Thank you.
Thank you, sir. Thank you for your input and also the information about Tamil Nadu RERA.
We extend a very heartful gratitude. Thank you to the chief guest, Mr. Kanaka Sabapati, for gracing the occasion and giving his valuable insights in his inaugural address. And also CA.Vinay Thyagaraj for a very comprehensive overview of the real estate industry and his and the importance it has in everybody's life. Thank you very much.
Thank you very much. And friends, we'll proceed to the technical discussion on the today's topic of the real estate. I request chief guest to stay back, and if sir has if sir is free to stay back, we request him to stay back. Otherwise, we thank again for him to be part of the inaugural and share about his valuable input. Chief guest, today's first topic is about income tax. Income tax is 1961 till. Still we are debating on the definition of an income itself in various aspects. Probably next year, government is contemplating taking out the income tax, bring the DTC. Even after removal or repealing the income tax, still we will be debating on the income tax 1961 definition of income itself. So to that extent, we have all the opportunities as a professions to debate on, discuss, deliberate on the provisions and classes of income tax. If somebody says, how many sections we have in income tax? How many sections? 298? Is it correct? That's the main sections. Under that, various classes, subclasses, provision, sub-provision, explanation. It keeps going, it's going beyond our size of a pillow also. So government felt it, make it simplify, bringing some of the new legislation. But however, tax is inevitable. In India, only two things are certain, death and the taxes. So rest assured that we'll have a sufficient opportunity for us to look at the income tax as the area of practice now the 75 years or whatever be the number of years we have practiced, and in the future also the moment DTC comes, rest assured another 50 years we can deliberate on the income tax. So there is no problem in terms of the practice. And first topic for the today is on the income tax again. And we have Sachin Kumar BP, vast knowledge on the income tax. I do not have his introduction, but whatever I know about him, I can share with you confidently. Sir is a partner of Manohar Chowdhury and Associates, our past president of Institute. Sir is having about 25 years of experience on income tax, including the international taxation. He has done a detailed research on various provisions of the income tax, and one amongst about the real estate and the joint development agreement transaction. Sir will deliberate and discuss about the impact of the income tax on the real estate transaction, and also the taxation which related to that. Probably will include some of the important case laws which has given some clarity to the various transactions which was attained to the Supreme Court. So with this small brief introduction, I requesting Sachin sir to take over. Before take over, I wanted the Sunil Kumar sir to come forward, hand over a bouquet as well as a shawl to the speaker. Sujatha madam, please you also join. As a token of love and appreciation from the Institute and on behalf of the members. Thank you, Sunil sir and Sujatha madam. Sachin sir, over to you on the income tax related to the real estate. Thank you. Friends, few announcements. If you have any questions, you have given a notebook. Please write your question, tear and give that paper to us. In the paucity of the time, we may not able to give a mic to each of you to express your question, but however, all your questions should be attended, subject to you give it in writing, and that handwriting we should understand. Thank you.
So, Sri N. Samapati sir, Mr. Vinay, my good friend, Sujatha, my good friend, and Suhail, and ladies and gentlemen. You know, as chartered accountants, one of the things that we do have expertise is on interpreting this income tax or interpreting the provisions of the regulations. So, much before we get into the subject of interpreting the law, understanding the nuances of law, it makes so much of an interesting read if you were to understand the business perspective itself. So, as Vinay was mentioning during his inaugural speech, that one need to look at a 360-degree view of the industry. Once we understand that 360-degree view of industry, two things will happen. One, we will be able to, the perspective with which we advise the clients will undergo a change. Because at many times, not that every provisions of the Act can express, in clear-cut terms what it means. Because unless we know the context under which or behind which that particular provision was introduced, it becomes quite challenging to interpret the statute itself. So therefore, it is important for us to understand the context and context in which that particular provision was introduced. And also, as I said, by understanding the industry, the perspective with which we advise clients probably will also undergo a change. And more importantly, for us as chartered accountants, when we have to choose where we have to practice, that also makes quite a sense. Then, for example, if you look at Vinay, when all of us were doing a study circle meeting, myself, Vinay, Sujatha, all of us, each one of us, we chose each different area. And Vinay was smart enough to choose RERA, which, if I look back today, in fact, it is good that one of us, we pivoted into RERA and the importance of RERA, therefore, we are here to discuss today and understand the nuances of this particular provision and what it brings onto the table as a professional or as a consultant to us. So, as Vinay was mentioning, let us look into the 360-degree view first before we get into the RERA, before we get into the income tax provisions. As I said, this view will help us understand the issues that have arisen in this particular industry. So if you look at, as everybody was mentioning here, even our chief guest was mentioning that it is the second highest employment generator after agriculture. In fact, the contribution of this particular industry is expected to grow to the contribution to the GDP of the country, which is now it's about 7 to 8%. It is expected to grow up to 20% by 2030. And again, the mention was made about Prime Minister Awas Yojana. So many units of houses have to come up in the country. And if you look at how many of them have come, close to about 348 lakhs or odd houses that have come up now. So how many more are required? So it is a sunshine industry that we are looking at, right? And even if you look at the PE investments that have happened in this particular segment, has been phenomenal. And the sort of the growth, various segment of this real estate, whether you take it as a residential, commercial, and in fact, while doing the research, I came to know that the workspaces, Bangalore has been the largest number of provider of these workspaces. In fact, co-working spaces. Co-working spaces, it's been the largest number of. It has provided largest chairs, basically the largest units that it has provided, right? And of course, the real estate clusters that we can see here, which is, and very interestingly, the IPO, I was just tracking the IPOs that have happened in this particular sector, and that is also quite encouraging. That is also quite encouraging to an extent that funds raised in 2024 is to the extent of 13,500 crores. All-time high of 13,500 crores, and it is growing, right? And of course, it has got its own positives. It's got its own negatives. If you look at SWOT analysis, we find that while there is no doubt an employment generator, no doubt there has been a record sales that has happened, and the segment that are there in the real estate has been diverse segment, and all the diverse segment have been doing well. And the opportunities that are there in this segment has been, again, considering the urbanization that is happening in the country, and the tourism sector that is growing, and so therefore the OYOs of the world, or for that matter, some of the, I'm sure, some of the real estate projects are being done only to lease it out to OYOs. These are some of the things which we have never heard of, right? And undivided share of land we have, that is something understandable. Undivided land share of space, where the land doesn't even belong to us, and this is a land or building which is owned by 100 people. The same building, let us assume, owned by 100 people, is different ways of monetizing the real estate is coming up. Very interesting ways of monetizing real estate is coming up, coupled with the fact that there has been an integration of technology, which is another interesting thing that we have in this is the technology that is integrated into it. So therefore, I was there in the US for one of our official work, and a person was from India. He had set up a shop, and it caught my attention because he was selling an idea to them that if you are an Indian and you have a property back in India, which is the case for most of the Indians. If you look at the generation of my fathers, they went to US, ensured that their children are educated, and our generation people, we've been there, children are born there, so they have become US citizens, and so therefore nobody is there to take care of the real estate here in India. So a unique sales pitch that I saw was that that gentleman was claiming, you don't have to worry about your property in India. I'll geotag the property, and I'll send you a report every month. What is happening about the property? One is geotagging the property, identifying the property. I'll take care of that property. I'll pay that taxes. I'll maintain that. If it is rented out, I'll take care of those rental things or finding a new tenant. All these services that you can do for sitting there in the US or sitting there in any other country, you can ensure that your property is secure here in India, and for that services have come up. So it's not only the real estate when it grows, the ecosystem around the real estate, how it is growing is something very, very fascinating to see. And so therefore, the considering, as I said, fractional ownership, the REITs that have come up, because the REITs have come up, the units that have, though there are 3-4 REITs that are there in India as we discussed today, but because of that REITs, the amount of real estate growth that has happened is threefolds for that REITs. If you consider a company would have constructed, let us say, 100,000 square feet of built up area, because of REITs it has become 400,000. So that is the impact that it has created, this industry has created. And so therefore, from that perspective, it is quite interesting to see how this industry is playing around, and then what are the regulatory landscapes that we have to understand before we advise clients in this about this particular transactions is something which is we have to keep in mind. Besides many things, some of the key legislations I have just noted it down here, which we generally focus on while advising or while doing structuring a transaction. And having said that, the question that comes up is there are, as I said, this industry comes with lot of opportunities, lot of monetization opportunities. Which one of the thing, as I mentioned, person sitting there in the US, properties being here, but how it is getting monetized is one aspect. Similarly, if you look at a transaction between let's say a person who owns a land and he has an inherited property, and it's a large land, and they want to monetize that land. They don't have an expertise to build, because either they could be either old people, or they are sitting there in the US, or maybe working professional but do not have any interest in being a developer, or no time for developing that property. So how do they monetize it? There are various ways they can monetize it. They can monetize it by simply selling that property, that huge land, acre of land. You can simply sell it, make money out of it. Maybe you invest in real estate, you invest in some shares or securities and then monetize it, possible. There's also another possibility is that, we venture into a joint venture. I have a land, another gentleman has a money, we bring in and create a LLP, and then, you take it forward and create joint venture, and so therefore you can monetize it. Possibilities there. There's also possibility of development management, where you only manage that particular aspect, manage that development of a land or development of the property. Also, there is something called a joint development, where the landowner contributes the land and his responsibility gets over there, whereas the developer takes over from there, takes all the relevant approvals, and then constructs it and goes one step ahead. Even markets it on behalf of the landowner. And so this is something called a joint development project. And so if you look at a risk and a return matrix, that outright sale, though it is a low risk, but the returns are also very low. While that development management, it looks at it as a very high return, depending upon what are the responsibilities one undertakes. Based on that, the return could be very high. Similarly, risk could be very high. Considering that joint development is something which has a very ideal, place where in that risk return matrix, wherein the risks that one undertakes is commensurate with that of the return that he gets. Considering that, if you look at, therefore, the joint development agreements have taken up, and there has been so much of an interest on this joint development projects everywhere, right? And it takes a different, there are different facets to this joint development agreement. Maybe there is one facet is something like, landowner contributes only the land, that's it. Maybe in another facet, landowner not only contributes the land, but he also undertakes actively, designing it. He wants to have the say on the design of the, the structure coming up, the approvals that are being taken. That could be another aspect. There's an aspect that, the landowner may say that I will not sell the property right now. I will only give a license for the developer to enter into my property. So it may undertake various facets of this joint development agreement. But what is important is each of these facets has its own tax consequences. That is what we have to understand today. Each of these things has its own tax consequences. Suppose if we were to say that we come together, developer is coming together and landowner is coming together, and together they have created a LLP, and then they build superstructure and they sell the superstructure and they get the money, that is the profit of the LLP, pay the taxes and share of profits in the hands of the partners is exempt from tax. Is that the method that you would like to take it up? Possibly, that is also possible. There's also possibility for the joint development wherein the landowner contributes only the land, right? And rest of the things are taken by the builder. So what is the tax consequences? Which we will look into it. All those things we will have a look at it. Now, considering now that we understand that joint development agreement is in that sweet spot. Why is it in that sweet spot? What is therefore the need for this joint development agreement? It is quite easy to mention that the land has become so expensive, so therefore the developers may not be interested to buy the land and then construct. Instead, they would like to have an agreement with a landowner who doesn't have an expertise on developing this land. Both of them come together, and both of them want to encash the opportunities that is available to them. So therefore, this JDA has taken that particular. It has become so important in present day situation. So what happens in this joint development agreement on a broader scale? The two parties, as I said, developer and a landowner, they come together to develop, and they share the revenue. The revenue sharing can happen in two ways. The revenue sharing can happen one by way of revenue sharing model. Another one is area sharing model. So again, this revenue sharing model is something, as I was mentioning, the entire money has come into a cross account. Out of that, so much of a percentage goes to the developer, so much comes to the landowner. That is a revenue sharing model. There's another model wherein you have a area sharing model. So much of a superstructure is constructed, 200 units of superstructure is constructed. Out of that, 50 units goes to, let us say, developer, 150 unit comes to the, let's say, landowner. So that is area sharing agreement. So again, each of these things has its own tax consequences, which we will dwell upon in some time. So therefore, when this landowner, for that matter, enters into an agreement, and that agreement comprises of various, with the developers, it encompasses of various components. One, if there is, in fact, it is very interesting if you look at the historical the journey, legal journey of this particular thing. See, way back in Mumbai High Court, there was a decision which Chaturbuj Dwarka Das decision long back. They mentioned that if there is a possession is handed over to the developer and there is a irrevocable power of attorney, this is enough. This is enough for one to construe that as a capital gain, to construe that as a transfer, and therefore it is a capital gain. Therefore, capital gain arises from this particular transaction. So it starts from there. It starts from there, and the journey has been very good because each time the decision has come, it reflected the the thought process of the professionals of that time. After that came a situation where there was no capital gains because the landowner used to give only a license for the developer to enter his premises. Enter his premises, construct the building, and as a consideration of having constructed the building, landowner used to give a part of that built-up area to the builder. So it is the other way around. In the first, there was a transfer that happens the minute you have handed over that power of attorney and possession was given to the landowner. Two, it came to a situation, there was no transfer at all. It was landowner's land, and landowner allowed the builder to come into his premises, construct the superstructure, and as a consideration, he gave some land, he gave some built-up area to the developer. So it came to that, and there it was held very clearly that there is no transfer. There is no transfer. The transfer happens only when the superstructure is given to the builder and the superstructure is sold to outsiders. So that was what was the judicial thinking at that particular point of time. Again, it evolved. It evolved to a stage where if somebody, this was quite significant that happened, that happened where a person who has, let's say, 60-40 land and he constructed, let's say, 4 units out of that, and he gave 1 unit to the builder and 3 units he retained. 3 units was given to him. In fact, the very fact that he underwent for this joint development agreement was that he did not have money. He did not have money, therefore he wanted money, and so therefore he wanted to monetize that land. He entered into a JDA. Now that he has got a building, question is, still he doesn't have money because what he has is only a building. Of course, chartered accountants came in, chipped in here, and then they said, okay, no problem, you can claim a benefit of 54 and 54F. That was allowed, right? That was, in fact, therefore, that 54F benefits was taken. But the question is, those who do not want to take that 54 benefit, they wanted to monetize it and get that money on hand, and they could not sell that property. They had the challenges. They had the challenges where there was a capital gain that has arisen, but they could not even sell that, and so therefore, without any cash flow, they had to pay the taxes. So that is where the situation, evolved over a period of time, and then government thought it appropriate to introduce 45(5)(a), and we will see that what is that 45(5)(a), intricacies of this 45(5)(a). Let's look into it in some time. So, as I said, the key elements of this JDA is they pool the resources together, and the cost for developing that will be undertaken by the builder, and then the title of the land is concerned, title of the land retained with that of the owner. It is not given to the builder. It is finally, when the construction superstructure happens, then it is finally handed over to the ultimate buyers. So through power of attorney, all the rights are given to the buyer, all the rights are given to the developer to take approvals, approach bank, and take loan from the bank, and whatever necessary to construct the building. All those activities could be done by these developers, and so therefore power of attorney is given to them as one of the elements of that particular GDA, and so therefore the development rights are given to them. Sometimes it so happens that besides the development rights, a marketing right is also given to the developer. There is a possibility that up to development, a superstructure has come up 200 units, and 150 units has to come to, let us say, the owner. It has come to him. It is for him to look out for how to sell or how to monetize that those particular units. This is one aspect. There is also a possibility that, like Godrej has been doing it now, they have that account where money comes into it, and then a part of it is given to landowner, right? So on the sale of those, that means they undertake even the marketing rights as well will be undertaken by them. So as I said, the revenue sharing agreement could be possibly refundable or non-refundable deposits. That is one component of the sharing of revenue. The another component could be sharing of area or sharing of revenue, and so therefore how that entire structure of revenue that works out, revenue sharing model works out is something like this. So revenue sharing ratio between the developer and the owner is mutually agreed in that particular agreement. And what is important in such agreements is to identify the distributable revenue. That is very important. This while negotiating with the builder, what comes down as an agreement, that distributable income, the definition of distributable income is quite significant. And then the concept of, in this particular case, in a revenue sharing JDA, the concept of kind of a dual ownership comes into picture, because they share the revenue. So therefore, owner transfers undivided right and interest in the land, and developer transfers the super built up area to the ultimate buyers. So therefore, the sort of a dual ownership concept comes into picture. And then modalities of sharing, as I said, could be through a bank account, and so as I said, the rest of the things I think we have discussed that. So in case of revenue sharing agreements, it's quite interesting to see the 45(5)(a), which we are going to discuss in case of area sharing agreements. That 45(5)(a) is not applicable to revenue sharing agreements. We'll discuss again why it is not applicable to revenue sharing agreements. We will discuss that particular part. But what is important here in revenue sharing agreement is when a superstructure is built or in the process of it being built, the tax consequences for the developer and the tax consequences for the builder. So, in fact, there is quite the issues around, for the developer, in some of the cases where this revenue recognition AS9 comes into picture, in case of the person who is a landowner, and then section 145. This interplay between this 145 and accounting standard 9 is quite important, so that sometimes when we are looking at accounting standard, let's say cash or a mercantile basis, right? And in case of AS9, it talks about when significant risks and rewards are transferred, only then the revenue is recognized. So for a owner of the land, when is the significant risk and reward is transferred. Significant risk and reward is transferred only ultimately when it is sold to the ultimate buyers. So while in accounting standard you look into it, it is recognized only ultimately, but if it is in a mercantile basis as far as 145 is concerned, there is bound to be a challenge in these kind of situations. So therefore, even while drafting the agreement itself, we have to draft it in such a way that there is a harmonious, both AS 9 and 145, there is a harmonious construction while drafting the deed itself, while drafting that revenue sharing deed itself. If that can be brought into picture, then lot of litigation can be avoided. Same is the case in case of, let's say, builder. In case of a builder, if you look at, he keeps on, land is not his money, land is not his asset, and he would have at best given, let's say, 1 crore or a few crores as advance. That is sitting as advance, and whatever amount that he is spending on construction is there in the working capital. Work in progress. It is there as a work in progress. He keeps investing in the project, and the work in progress keeps on growing. So, at what point in time that they have to recognize the revenue? Again, here the interplay between AS 7 and AS accounting standard. The section 145 tax accounting standard. That interplay has to come into picture. And as all of us know that accounting standard 7, AS 7 talks about this, percentage of completion method and those aspects. So how do we integrate harmoniously this accounting standard 7 with that of 145 tax accounting standard? This is one, again, while we are looking at the stages at which the revenue is recognized, if that stages can be commensurate with that of let's say AS 7. AS 7 talks about you have total cost and total revenue, how much of a cost that you have. Cost and revenue matching principle is what AS 7 is all about, isn't it? So therefore, that cost, if it is, let us say 25% cost is incurred, what is that is constructed within that 25% of the cost? If it is 50%, what is it constructed within that 50%? If that can be, very clearly mentioned in the agreement, so therefore, lot of litigations can be avoided at that particular point in time. So this is one aspect that I wanted to bring it to your attention. And so therefore, in this revenue sharing agreement, what are the challenges or what are the advantages or disadvantages? If you look at the advantages, as far as landowner is concerned, you can postpone the tax implications for the landowner, because it finally comes at when you are sharing the revenue, right? So therefore, it can go up to postponement of taxation for the landowner. As far as provisions of 50D is concerned, 50D is not applicable for on the date of entering into this revenue sharing agreement, because it is finally, we are not going to estimate anything. It is the revenue that gets generated and that is going to be taxed. So, however, you have that disadvantages also, that owners cannot hold the stock and have the benefit of increase in because the revenue share is determined, and so therefore it has to be sold. So therefore owners cannot hold the asset and sell it later. So that may not be possible. And no recourse is available to owner if developer delays the completion, except for making that specific performance claiming for a compensation. And developer could have any issues if the owner has not paid their dues, or then developer could get into challenges in these situations, as there could be an attachment and things of that sort. And owner could also deem to have entered into an activity which could be construed as adventure in the nature of trade. So therefore there is a possibility of it being treated as a business income. So therefore finally there is a possibility that because two of the developer and a builder, developer and a landowner coming together, the income tax department may consider this as a AOP and tax them as a separate unit, and this possibility is also there. So these are some of the disadvantages one has to keep in mind. So now, so far what we discussed was revenue sharing, joint development agreement. If you were to look at as, area sharing joint development agreement, so in area sharing joint development, what happens, instead of revenue, part of the units, let us say 200 units are built, out of that 50 units are given to the landowner and 150 has come to the builder. This sort of an understanding, and so therefore what happens in this particular case, the question here, important question that arises is, what is the point of taxation? What is the point of taxation? Is it the date of entering into a JDA is the point of taxation? Is it when builder commences construction activity, is that the point of taxation that arises? Or is it the date when owner receives his share of super built up area, which is the area of, which is the date on which the tax liability occurs? So this is something, issue that we need to discuss as far as joint development agreement is concerned, as far as revenue sharing, area sharing joint development agreement is concerned. So it is in this context, as I was mentioning, that the judicial history, we have a significant judicial history as far as area sharing joint development agreement is concerned. When it started with, Chaturbuj Dwarkadas Kapadia's case in Mumbai High Court, where they clearly mentioned at that time that if there is a possession has been handed over and there is a irrevocable power of attorney, then it is deemed to have been transferred. There is a deemed transfer, and so therefore the capital gain arises on the date the possession is handed over. So this was there for some time, till this Jasbir Singh Sarkaria, that EAR decision that came up, New Delhi EAR decision, and this decision said the date of transfer shall be the day when effective control over the land was transferred to the developer. In that case, irrevocable power of attorney issued to developer resulted in passing over of the effective control, and hence the date was taken as the date of transfer of for the purpose of invoking section 45 of the Act. That means in this particular case, it was the power of attorney. In earlier case, it was power of attorney plus, your possession was being handed over. Here it was effective control that was given, which is irrevocable power of attorney. Two, it again, the judicial history, if you look at one very Punjab and Haryana High Court decision came up way back, in 2015, and it was C.A.Sujatha Atwal's case, Punjab and Haryana decision. In this, very interestingly, the court held that the handing over of the possession in pursuance of a JDA shall at best be described as a license for the development of the property, not falling within the purview of section 247(5). Registration of the agreement is mandatory to consider the transaction as transfer. So here they mentioned that possession is fine, your power of attorney is also fine, but unless that agreement is registered, they are not talking about the sale deed to be registered, they are talking about the agreement to be registered. If agreement is not registered, then the question of transfer of property, deemed transfer has not happened. That, even 247, that the deemed transfer, that provision is not attracted as long as the agreement to transfer has not been registered. This was a Punjab and Haryana High Court decision, and rest of the decisions for that matter, all High Courts except Punjab and Haryana took this particular view. So therefore, professionals here in Bangalore or in Chennai, we were under, we followed our decisions, our High Court decisions, and so therefore we said the question of registration doesn't arise, no registration at all. No registration, because at the time of registration you had to end up paying some amount of stamp duty, so therefore we were advising clients not to register and then continue with the JDA with the irrevocable power of attorney and handing over the position. So that was the thing that was happening. That was the model that was there for rest of the country except in Punjab and Haryana. This continued for quite some time until in 2017 when this Balbir Singh Maini, that decision of the Supreme Court that came up. That Supreme Court decision of Balbir Singh Maini was just to, it was just on the lines of that Punjab and Haryana High Court decision. So, in this particular decision, it was said, it may be noted that a JDA entered into by an SSE with the developer can be qualified as transfer under 247(5) of the Income Tax Act only when such agreement is registered. So, registration of agreement was held to be a mandatory for it to be considered as transfer in this particular decision. And in order to qualify as a transfer of a capital asset under section 2 subsection 47(5) of the Income Tax Act, there must be a contract which can be enforced by law under section 53 of the Transfer of Property Act. If it has to be enforced by law under 53 of Transfer of Property Act, enforcement when it comes, it comes only when there is a registration, when it is registered with a sub-register. Only then the enforcement happens. So therefore, even the Supreme Court held on, concurred with the view of the Punjab and Haryana High Court. So therefore, if it is a Supreme Court and subsequently all the decisions of the Supreme Court, whether you take this Chunilal Bhagat and subsequent decisions, all the decisions are on the same line. So, if you look at these decisions, again let me say all these decisions, it is more towards this area sharing agreements. So therefore, with that, with that understanding, we discuss this. And as far as this Supreme Court decisions, when it came and it was upholding the view of the Punjab and Haryana High Court, the question was what happened to those, agreements in other rest of the country, which had taken a view that registration is not mandatory, and they went on to, went on with power of attorney and handing over of the possession. So, in fact, it looked like as if there was no transfer. Though there was no transfer, assessee has gone ahead and paid the taxes. So it appeared like that, no transfer at all. But then assessee has gone ahead and. But then the question was not like that. Department's contention was, it is not that there is no liability for a tax and assessee has paid the tax. The question of the department was, when you are supposed to pay tax, you have capital gains on the higher amount of consideration. How come you ended up paying on the lower amount of consideration when it was transferred, when the property was transferred along with the power of attorney? So it was something like during that time, if let us say 60 by 40 site and 4 units are constructed, 3 units have to come to, let us say, landowner, and 1 unit has to go to the builder, let us assume. It all depends upon the area. And so, but then for the example, let us look at it like this. If we were to look at these 3 units were to come to the landowner and 1 to the builder. So how is that we used to calculate at that time? We used to calculate that 25% of the land, undivided land, and that is what we have transferred, right? And what we have got is 3 units of built-up area. So how was the capital gain calculated? Because 3 units was not constructed at the time of the agreement. So how is that we used to do? We used to identify what is the market value or stamp duty value of that 25% of the land. Market value we used to identify, and then deduct indexed cost of acquisition of the land. The indexed cost of acquisition of the land. Market value of the land of 25%, indexed cost of acquisition of 25% of land, whatever is capital gain, we used to pay that. Though we have paid much in advance, much before that agreement is registered. So while assessee's contention was, I have already discharged the tax liability on this, was the assessee's contention. Department said, no. What you have done is on the 25% of the land. That is not how you are supposed to do it. Department contention is altogether different. It is that you have handed over the 100% of the land. When you have handed over the land, it is the 100% of the land you have handed over to the builder. And what you are getting in turn is 3 units. So therefore, what is the capital gain is the market value of or the stamp duty value of that 3 units plus the land, undivided share of land for that 3 units, plus if there is anything cash component that was given, cash or check component that was given, minus the cost of acquisition and indexed cost of acquisition of the entire land, was the contention of the department. So therefore, this litigation again went on. This was there for quite some time again. So that is when the question, this after a lot of deliberations and section 45 5A was introduced. Just to address this sort of an issue. So what is this section 45 5A? 45 5A, if we have to read it in a simple from a bare act, it says, notwithstanding anything contained in subsection 1. Subsection 1 of 45 talks about capital gain arising on the date of the transfer. When is the transfer? When this land and building is handed over, right? So that was the transfer. Land and building is handed over. So, and the consideration is received, that is the transfer. They said forget about that particular concept of transferring the land and building or deemed transfer of land and building. Notwithstanding anything contained in section 45(1), where the capital gain arises to an assessee being an individual or a HUF. This provision of 45(5)(a) is applicable to individuals and HUFs. So therefore, it is not applicable to any other persons, like it is not applicable to partnership, not applicable to companies, artificial juridical persons. It is not applicable to anybody, any other person other than individual and HUF. And where the capital gain arises to an assessee being an individual or a HUF from a transfer of a capital asset being a land or a building or both under specified agreement, the capital gain shall be chargeable to income tax as the income of the previous year in which the certificate of completion for the whole or part of the project is issued by the competent authority. So therefore, while the taxation happens when there is a transfer, that is when the land is handed over, when power of attorney is given, while the capital gain gets crystallized, but then the collection of that gets postponed to completion certificate. Now, while the transfer has happened, but the collection will get triggered only when there is a completion certificate that one receives from the competent authority for the whole or part of the project, and for the purpose of section 48, that is cost of acquisition, the stamp duty value on the date of issue of the said certificate of the share of his share being land or building or both in the project as increased by consideration received in cash by or check or draft or by any other mode if any shall be deemed to be the full value of the consideration received or accruing as a result of transfer of the capital asset. So what is this provision, what is this says is very clear. It is applicable, as I said, it is applicable to individuals or HUFs, it is not applicable to other persons, and it is applicable only in respect of transfer of land or building, transfer of land and building which are capital assets. Again, if this land and building is a stock in trade, this 45(5)(a) is not applicable. It is applicable, and in fact there is a tax planning measure as well. So therefore, if you have to get over this 45(5)(a) issues, sometimes it may not be very comfortable to have this 45(5)(a) trigger for various reasons. Wherever it is not, if you can convert capital asset into stock in trade in your books, and then enter into a joint development agreement. In most of the cases, you will be able to get over the rigors of this 45(5)(a). Sometimes, in some cases, 45(5)(a) is helpful. We can go ahead with 45(5)(a). Wherever you find that 45(5)(a) may not be helpful, possibly it is a time where you convert that capital asset into stock in trade first, and then introduce that stock in trade into this joint development agreement. You will be able to mitigate a lot of these challenges. So, of course, how do we do that? How do we convert capital asset into stock in trade? Any idea? How do we convert capital asset into stock in trade? Is there any
rate of conversion
sorry?
Rate of conversion will be treated as the capital gains or otherwise that can you convert your capital asset.
But how do we convert capital asset into stock in trade?
JDA, I mean, the JDA mentions that it is the asset being introduced as is part of the tax.
I'm a landowner. I want to introduce my land. So if I were to introduce my land as capital asset, 45(5)(a) is applicable.
Yes.
But I do not want 45(5)(a) to apply. I want, finally when the sale happens, I want at that particular point of time to pay taxes. I do not want at 45(5)(a) completion certificate and all. While there is a completion certificate, while I get a completion certificate, but I might not have sold the land. I might not have sold the units. Where is the money? So therefore, I do not want to sell. I do not want to pay the taxes at all. I want to pay only when I get money. Finally, at that particular point of time, I want to pay taxes. Sorry? That's exactly my first question is, how do you bring it into business? It was a capital asset. I want to bring it to business. How do I do that? Sorry?
Introduce it as a capital business. The landlord.
So it is in my fixed asset. Now I want to bring it into my, as a stock in trade, I need to convert.
You can MSME registrations and fix it as a
Take it as a business. Next year, treat it as a business. Bring it to business income.
How?
By your book
start
entry.
incurring expense.
Sorry?
You have to start incurring expense on the land. Not
necessarily.
part of your business, right? Once you start incurring your
bring the land as an individual, right?
Land as an individual.
You are not a business owner.
I am not a business owner. Now land as a owner. Land. I am a owner of the land. Okay. I entered into a JDA. And according to this 45(5)(a), when I get 50 units to myself, 50 units when I get, and completion certificate is there, capital gain triggers. I need to pay capital gains. I don't have money. And you may say you sell it, but if there is somebody to buy this, then I can sell it. How can I assure? I mean, without, and how long it takes for me to sell, I do not know. So real estate it takes time. Even for big builders, it takes time. So the question therefore is, one of the ways that we can look at it is, can I convert if this 45(5)(a) comes into picture only if it is a capital asset? If it is a capital asset, being a land or a building or both. Suppose if it is not a capital asset, if it is a stock in trade, then 45(5)(a) is not applicable. What happens if it is a stock in trade? It is my business unit. Like how I purchase and sell so many units, I purchase and sell. Ultimately, when I make a profit, I will do that. And suppose if I were to hold my accounting, this thing as under 145, it is a cash basis of accounting. So finally, eventually, when I sell it, I will pay the taxes, which is comfortable for me. I want to get into that mode. To get into that mode, first I have to convert capital asset to stock in trade.
Open a proprietary account and then transfer it to current asset and then credit to capital.
I can give my land itself as a capital to the joint development.
You can. Then 45(5)(a) is applicable. You can, but 45(5)(a) is applicable.
In your books of account, you have to make the adjustment.
The partnership, something like that, you know.
Just open a current account. Current accounts are only business people are eligible to open.
So you opened a current account, but my asset is there. How do you bring that asset to current account?
In your
Declaration in what?
Prepare the books.
You have to make adjustment in your books of account.
How?
Treating the capital asset as a business, that from now on you will be treating it as a business asset.
So simply, if it is a very simple. If your capital asset, it is sitting in the capital asset. Bring capital asset down to current asset. Simply you bring it down and
Change the group head.
That's it. But of course that you can't do it in Tally. You have to pass an entry and all those things. You have to pass a relevant entry to bring it from fixed asset to current asset.
But this is not open for NRIs because they can't do business in India.
Yeah. So let's look at it something like this. With this question we will go for a tea break and come back. Suppose if it is a capital asset. Suppose if it is a stock in trade. Suppose if it is a stock in trade, that stock in trade I want to make it as a capital asset. See, I have 50 units I got. Out of 50 units, I think, I want to have for my living 2 units. So it was stock in trade. Now I want this out of 50 units, let us say 5 units for my personal use. Now I have to do what? Stock in trade to capital asset. What happens if I do from capital? First of all, how do you do it? Again, the answer would be very simple to say that take this 5 units from stock to bring it to fixed asset. Okay, I will bring it. What is the tax consequence?
Pay capital gains when we get the CC.
CC we have got. I have got CC, 5 units. CC already I have got. Now these out of 50 units, 5 units I want to use it for my personal use. Now from stock I want to bring it to fixed asset.
You have to show it as sold. When you sell it, that is the cost of the fixed asset of your own means.
Deem the same. Where is it provided? Section 28. If you look into section 28, one of the subsection, not able to recollect the subsection. I will let you know. Section 28, if you look at business charging section, wherever this asset, which is stock in trade, is converted into capital asset on the market value, stamp duty value of it, that means the minute, see, it was quite easy for you when you said from stock in trade, capital asset to stock in trade, only move the asset from here to here so that you can postpone your tax liability. Same way, if you think that, I have stock in trade, I'll move it to fixed asset, then it is dangerous proposition, because the minute you transfer it, the capital gain, the tax liability triggers at that moment.
You can also maintain it as closing stock and keep on going on for years.
Yeah, you can do that. You can keep it as a closing stock. That's okay, fine. But then, finally, eventually,
If I transfer to stock and trade, then will I not lose my capital gain provisions like benefits of capital gain and
but then you will get depreciation, no sir? If you take it to fixed asset, and you want to use it for your business purposes, as office space, you can claim depreciation.
No, I'm talking about the other one. The capital gain from capital asset as bringing the stock and trade, and when I sell it, I cannot get the 20% additional tax and 30% as for the normal business income. Will not be disadvantage profit.
I didn't get your question, sir.
See, when you are selling it as a stock and trade,
yes.
Then I don't get the capital gain benefits. No?
Yes, you don't get capital gain benefit. Yes.
So it will be treated as a business income.
Yes, it is treated as a business income. Yes, it is a business income. It is not a capital gain now. It is a business income. But then you are postponing your payment of taxes. You will be paying taxes only when you have money on hand. Okay, right. So we will take a break for coffee and
come back again.
We thank CA.Sachin for a very detailed analysis of the income tax implications on different aspects of real estate transfers and joint development agreements, area sharing, revenue sharing. It was a very lucid explanation that he has given. We are breaking for tea for about 15 minutes and kindly reassemble after that.
The member in the association also part of the cooperative society, and the association also keeps its deposits in that particular cooperative society. Then only you get that specific exemption, not on a ad hoc basis. All the other interest incomes are taxable. We have decisions.
It is spended for the activity of the association, so that interest will be taxable.
Sir?
It is spended for the activity of association.
Sir, spending is different.
Like we are collecting higher corpus and lower maintenance.
That was his question. He also raised the same question. So when you look at the P&L, you will come to know. When you look at the income and expenditure, you will come to know where is the money coming from. Assume your maintenance charges is only 1 lakh. I am just giving you some number. Whereas your surplus is about 50,000. Okay, that means 1 lakh you have collected, 50,000 is your surplus. Well and good. 1 lakh is your maintenance. You have a deficit of say 75,000. Does it not raise a flag? Red flag?
Corpus is also from the members.
Perfectly fine, sir, but Act looks at it in a different way. In GST, there is a provision. Income tax, irrespective of wherever you keep, whether you call it as a corpus, you park your corpus fund in the FD or maintenance in the FD, irrespective of that, interest is the same. The color does not change. Interest income is liable under income from other source. So these are all the dividend income and sale of scrap. These are some of the yes sir.
What is the rate of tax? 20% plus tax?
We will come back to that, sir. We'll come back. So when it comes to the rate of tax, 167B talks about maximum marginal rate, where the association of person, where the shares of the members are indeterminate. This is a general provision. So associations in general are applicable under 30% plus surcharge whatever, depending on their slab. This is a general rule. But if you look at the recent provision 115 BAC, class 1A was inserted. Okay, from 1st of April, if you look at the new rate, right? New rate, old rate, there 115 BAC, there is a specific inclusion of association of person in the current year, because of which you are eligible for taxation at a slab rate, not at MMR. Right?
See, actually, we had a registered society, the Adv.E. Societies Registration Act, wherein we applied the registration number in the ITR itself. It took the individual rate only, not at the MMR. I mean, even previously also.
So previously, if you are taking, I don't want to comment, it is the software which takes care.
ITR itself was taking the individual rate.
You will get notice.
They have sent a notice for AOP.
Many registered associations have received notice. If you haven't got, you haven't got.
See, probably you should see whether you selected as a AOP or a cooperative society. What you give it.
AOP in that we gave the registration number. What is actual actually? Understood.
So surcharge is also applicable, but one thing which you can take benefit of is you can take the benefit of expenses which you are directly relatable to your earning that income, assuming you are earning some sponsorship fee. Okay, if you are able to relate that income with expenses, you take deduction under that. Only the net you offer it for tax. Right? So this is one benefit you can take from income tax. And ITR 5 to be filed, I am just rushing through because I think all learned members very much aware of these provisions. Due date is 31st, and the principle of mutuality, there is no income tax on the maintenance income, and tax audit is applicable or not. That's one question many of them get. It is not, because tax audit 44AB provisions are applicable only for business income, so this will not be applicable. And how do we fill up that doubt? Also, many people get the doubt. whether do they have to fill up all the income, expenditure, balance sheet, schedules, all that needs to be filled, or if it's sufficient enough if they fill up the income from other source and then balance sheet, is that sufficient enough? Because we are driven by software. Software will not accept if you don't, fill up certain field. So minimum disclosure, maximum disclosure, it's left to you. But the principally, you have to disclose the entire income, P&L. But you take the exemption under mutuality, okay? Or you don't disclose that income. That is whatever it is, surplus or deficit. Because the software will show error. Tomorrow if you get a notice, then you will end up explaining. So for that you have to fill up the balance sheet, complete balance sheet you fill up, disclose the other income from other source, schedule you disclose it, and then disclose the schedules, so that the correct disclosure will make your books of accounts and compliance very clean. As I said, income from other source, another doubt many members get is that they invest their funds in, as per their bylaws, if they permit, they are allowed to invest in mutual funds or any other form of securities. If that being the case, even capital gain, whatever is that applicable rate will be applicable for RWAs also. So only distinction with any other normal taxpayer is the maintenance income alone is exempted. Apart from that, you take any section 201, 192, 194, whatever section you take, 234A, B, C, D, whatever, F, TDS, 234E, non-filing, and 201A for advance tax non-payment. All other penal provisions are very much applicable for resident welfare associations. So with this I have covered all the other parts of the discussion. Now we have come to the last but not the least, very interesting part, right? Very interesting part. As I said earlier, when I started my practice, nothing I could get only apartment associations, but what I am today is only because of resident welfare associations. So there is an opportunity, but it all depends on how you view it. So it is, as members, we have to put in some extra effort in involving and then creating awareness, regularizing. Probably it may take time. So the opportunity means, don't look at the opportunity as direct opportunity. You can connect with members. There are good people who are there in the apartments. If they like your work, they may refer other places, right? So there's always an opportunity there. And if you come because of this new law, enactment of new law, there is opportunity in drafting of bylaws. You may ask, there is already a bylaw which is notified by government. Why does it? What is the value add there? Definitely there is a value add, because the new concepts are introduced, right? What? Pet. Owning a pet. Everybody wants to own a pet in association. What is the rule for that? Right? It is nowhere there in the bylaw. Unless it's there in the bylaw, you cannot enforce it. So at the time of framing the bylaws, it is for the professionals to guide or get into some kind of brainstorming with the members, key members, to understand what are the general practices, how the younger generation wants. Okay, so these are some of the things which you have to think through and then add value in that area. And photo services, I call it, it's called handing over, taking over process, where the builder who is registered under RERA, he hands over the association. He hands over the association after filing the deed of declaration. We call it as declaration. Then the association forms with its own members. Association is formed. So generally, in larger apartments, the 1 year of maintenance is collected upfront, right? So in the form of corpus and in the maintenance. Majority of the bigger builders, they even handhold and do the servicing, like as a service provider for another 1 year for maintenance and other things. So, and also the registration does not happen immediately. Once the unit is completed, the possession and handing over happens at various points of time. Occupancy also happens at various different points of time. So when the association is formed, some of them might have got registered at that point. Some of them wouldn't have got registered. Some of the new registrants would have paid the maintenance and corpus fund to the builder, right? So which needs to the builder has to return it back. This is a big reconciliation process, right? How we say cash to order or report to record to report. This is one such area which you can focus on. You have to give a due diligence report. Okay, this is a comprehensive assignment, I would call it, because you can collaborate with lawyers, engineers, architects, and then legal professionals, join together, take it up as an activity where you can give the best service to the apartment, because in today, many of the apartments, larger piece of apartments, they give the blueprint, they have the plan, everything is in place, but it is due diligence. Once the association is handed over, it is the responsibility of the association to ensure that it is as per the plan, approved plan. What it was promised in the brochure should reflect in reality. For that, they need a due diligence. The due diligence can be taken as an activity under 3-4 heads. Right from measuring the land, right from measuring the land, right from measuring the common area, right from measuring what are the amenities that he has promised, what is up to flooring, whether is it up to the sanitary ware, whatever it is. Those things are all, fittings are all there in that as promised by the builder is in place or not. You have to engage it. RWA has to engage a team of professionals. With their support, they can give a report to the builder. As per the RERA regulations, time limit prescribed as per RERA, association has got every authority to enforce or make it happen if the delivery is not up to the mark. So these are some of the things which we come across once the association is formed. This is a very big opportunity. It's not a small. Then next comes is the reconciliation of receivable, which I told earlier. Reconciliation is always, we thought, okay, once it is online, everything is becomes easier. It's not so. It's not so. More online, more opportunity. When income tax was changed to online, number of taxpayers have increased. Same way, even in resident welfare associations, they make payment through UPI, through Google Pay. They fail to submit. Oh, I pay for my friend's maintenance. How do I know? My name will be there against some unit. So there is always a reconciliation problem. So that can also be taken up as an independent activity. I am not saying this is a full-time activity. One of the activities where associations look for help. So this is one. And integration of accounts with software. This is the biggest opportunity I would call, since we are in the digital era now. Digitization of accounts and AI is coming into play. We have accounting software, and back end there is a billing software. We have to, it is humanly impossible to enter each apartment number. When there are 2,500, you cannot keep entering in your accounting software. So the billing software should get integrated so that the receivables are matched. The billing software may not support the full accounting entries. The accounting software is not advisable for maintaining 2,500 receivables, invoicing and receivables, tracking of those. So that you need a bridge. So as chartered accountants, if you are techie, then definitely you should think of this area. In just one click, automatically it gets imported. So this can be explored. Then litigation management. Every association is getting notice from some authority or the other. GST is a big. I explained. I spent more time on GST, so it's a legal journey still not concluded. 7,500 up to itself is going to run for next few years. So there are associations which are taking a position that constitutional principles cannot be overridden by any statute. So 7,500 itself is not taxable. Let the government say, let them insert it in 7.1 AA, but still GST will not apply for associations. This is one stand which very risk appetite and enthusiastic litigant RWAs take the stand. So next is that you can be a board advisor. What is a board advisor? There are certain companies which are doing services outsourced. This complete activity of the association itself is outsourced to external agencies. Their job itself, full-time job, is to take care of these activities. Like, they will employ one admin staff, reconciliation, accounting, completely it's been outsourced. So that one opportunity is in front of you. And also there are various multiple subcommittees are created. They look for chartered accountants help, since we have the comprehensive view of how the legally, how it can be. Forget about the technical side of how the STP should work, BWSSP, those things keeping aside. From taxation angle, accounting perspective and auditing, we can be the advisors to the board. And the election officer, there are legal officers, advocates take up this role. Election is a process which needs to be conducted in the very diligent way. So associations also seek the help of election officers who will take up the nomination, scrutinize it, then conduct the election process. In the AGM, they will be appointed. So these are some of the internal audit and compliance services, some of the things which as chartered accountants we can contribute and explore as new area of opportunities. With this, I have come to the end of my presentation. Thank you so much for patient listening. I hope I have justified your time. If you have any doubts, you can always do.
Thank you, Sujatha madam. Thank you, Sujatha madam, for giving a elaborative beginning to the end of the law related to the apartment management opportunities, risk, reward, and also the disputes litigation. I am sure that each one of you agree that is one of the area of opportunity to the members, and also equally challenging to convince this group of community of the members and the residents. In a house 4 members, there are 8 views. A 2,000 apartments of a 4 members of 8,000 of it, 80,000 views. In between, one chartered accountant has to convince all of them balancing. This is something which is always a challenge as a chartered accountant. And few things which I would also add to the presentation, madam. Our audit reports should be a comprehensive, and even though it's a non-statutory audit report, like there is no format of audit reports are mentioned, as a prudent chartered accountant, because this is the members' participation, give as much as possible in terms of your qualification, disqualification, attention to the members. We have seen in various associations, one group of members make an attempt to make the chartered accountant to be a party to the litigation. So it's very important for us to include those things. Also, to the notes to accounts, also give as much as details for the members to understand, and also a disclosure. Fundamentally, any association which manages is by the management committee, generally 1 year or 2 years of their term. They keep moving, but litigation from the department starts after they move out from the positions. So again, that becomes a challenge for the present or the future management committees. The transparency and the governance is a key success to any association which manages these apartments. Finally, nowadays the apartment which used to be a 4, 8, 100, 200, 300, 500, now it has become a township. It's equivalent to a one village, equivalent to a one can decide a corporator, and we have seen a group of association can select a MLA also. To that extent, this has become the importance in terms of managing that, keeping everyone together. One, I would like to mention that, madam, if you have served as a management committee, rest assured that you can become a politician also. Because you have been taken all possible threats, all possible good, bad from the residents, right? It's a training ground, perfectly, sir. So with this, I thank you so much for your detailed presentation and very useful and thank you, madam. Thank you on behalf of SIRC of ICAI. Sir, there's a lunch. Madam is available. You can take the questions. Madam is available till the evening. You can ask the questions. Please come back, and 2:30 will assemble for the next session. Thank you.
Now to start again, and I have the pleasure in welcoming Mr. Vinay on the dais, who is going to take the session today, and Suhail also. After Vinay, he'll be taking. Okay, they'll take it together. That's good. I would like to request CA Anand to please come on the dais and give a shawl to Mr. Vinay. I would request CA Rajagopal ND to come and offer a shawl to Mr. CA Advocate Suhail. Okay. 1 second. Sridharan V, is he available? No. Okay, I'll leave. Let me give a brief introduction of both of them. I think everybody knows CA.Vinay Thyagaraj by now because he's been very actively involved in the whole of morning session. But anyway, it's my official duty, so let me give a brief introduction. CA.Vinay Thyagaraj is a CA with over 2 decades of expertise in real estate, direct taxation, business structuring, and financial consulting. He has built a notable practice in Bengaluru and leads a skilled team that delivers comprehensive services to a diverse clientele. As the co-founder and partner of Messrs. Venu and Vinay, Chartered Accountants, Vinay has guided the firm's expansion from Bengaluru to major Indian cities such as Mumbai, Hyderabad, Chennai, and Anantapur. He holds a degree in commerce, qualified as a chartered accountant, and holds a law degree also, demonstrating a robust academic foundation. He has further enriched his knowledge with certifications from ICAI in Information Systems Audit, DISA, Diploma in Insurance and Risk Management, and courses on anti-money laundering and Benami laws. His extensive training and diverse expertise significantly enhance his leadership and client service approach. Mr. Vinay Thyagaraj is a respected trainer and speaker specializing in real estate and RERA. With a portfolio of over 350 presentations, he has engaged with prominent industry organizations including Naretco, CREDAI, BAI, the Builders Association, ICAI, ICSI, the Institute of Engineers, the Council of Architects, and various home buyers associations. His insights are frequently sought after by TV channels and All India Radio for finance-related programs. Additionally, he has contributed as a co-editor and co-author for authoritative books on Maharashtra RERA, Karnataka RERA, published by Taxman Publications. He is also a governing council member of National Real Estate Development Council, known as NAREDCO. So let me introduce the other speaker, since both of them are going to take the sessions jointly. Mr. E. Suhail Ahmed is an advocate, partner of the firm Trial based in Bengaluru, and partner of the law firm Smriti Legal LLP, a law firm specializing in RERA litigation and advisory services. Principal legal consultant for RERA Consultants LLP, a consultancy firm offering RERA-related consultancy, advisory and compliance-related services in Karnataka, Telangana, Andhra Pradesh, Kerala and Tamil Nadu. He is practicing in the field of property laws, corporate laws and other civil laws, and having about 23 years of experience in the field of property laws. He is a former chairman of Legal Committee and member of Core Committee of National Real Estate Development Council, Karnataka. He is also a former member and committee member for stem cell research at Jawaharlal Nehru Center for Advanced Scientific Research in Bengaluru. Governing Council member of NAREDCO Karnataka, currently president of L&T Raintree Boulevard Apartments Owners Association, an apartment complex having 2,240 apartments in Bengaluru. Contributed to the spread of awareness of the Real Estate Regulations and Development Act 2016 across all the southern states of Karnataka, Telangana, Andhra Pradesh, Kerala and Tamil Nadu. He has conducted workshops for Telangana Real Estate Regulatory Authority, CA Institutes, CS Institutes, NAREDCO, Karnataka, CREDAI, Mysore and other chapters, Times of India, SDFC, Telangana Builders Association, Institute of Engineers, Hyderabad. He has also been practicing in the field of real estate for more than 20 years and has specialized and practicing in RERA since 2016 and represents and advises promoters, consumers and apartment owners association across all the 5 southern states. Rotarian since past 14 years, member of Rotary Rajmahal Villas, Bangalore. Thank you.
Good afternoon and welcome back. Very difficult to keep the audience awake post-lunch. But it's my promise, none of you will close your eyes also. And we had a full house in the morning and matinee is off. We'll see the last show because GST being the pet for everybody, others members also will join. So this session is about RERA. And can you switch off the front lights for a better visibility? Not the back. Yes, perfect. Yeah. So since morning we have heard the authority from the mouth of the authority itself for the RERA implementation in Tamil Nadu and what they are doing, and also an opportunity for the chartered accountants in the area of the RERA also. Also he has highlighted importance of the chartered accountants to provide the services to the builders, developers under RERA. Having said, before I proceed, I know that I have given the presentation on RERA in this hall for the last 4 or 5 years, except in the COVID period. I'm familiar with few of the participants here, including Sir also. And how many of you hearing about RERA first time? First time about hearing RERA? Only 1, 2, 2.5. RERA, listening. Yeah. No, but attending. Attending is the first time. Okay. Sir, it is not about hearing about the movie name, sir. You should watch also. Okay. When I say about RERA, you should have attended, not only heard only the name of RERA. How many of you practice RERA? Practice in the sense issue of CA certificates, advising the builders, developers. How many? 1, 2, 3, 4, 5. That's all. Morning, Kanaga Sabhapatis are mentioned. 30,000 projects in Tamil Nadu, next to the Maharashtra, registered in Tamil Nadu. Chartered accountant should issue the certificate for each of this project.
You are not making the authority ask for all of that here.
Yeah. So then who is issuing the certificate? Only 5 people.
They are going to their respective chartered accountants.
Okay, they are not here. Huh? Acha, they are not here. Okay, good.
Even I am doing only that.
Oh. Okay, you are doing only CA. Sorry, RERA certificate.
Only for his
For
clients.
your clients. Okay, very nice. Good, sir. Appreciate, sir. So,
And he doesn't pay anything extra.
that is the problem. Okay, that is the problem. Nobody pays extra unless you ask, sir.
Even if I ask him.
Okay, even if you ask, you don't pay it. Then he is a part of your family member. You have a part of his property after his demise. Okay, you're a partner with his growth. If nobody is asking you, like our politicians don't ask anything, our property belongs to them. So that's how you look into. Probably you should start asking them. You may lose the client, but he has to go to somebody else, right? Either to me or somebody else,
He
right?
doesn't mind touching the field.
Okay, and being with you.
He don't have anything. No money in the pocket.
Okay, fine. On the lighter note on the other side. On the screen, can you see something?
Good afternoon, everyone. So, going forward from what Sujatha Madam said about associations, how important it is for an association. This is a case, this is my own case. I fought against L&T. L&T though had executed the deed of declaration, they were not handing over the maintenance. That is one of the things, and there were various other violations. So this is where Karnataka RERA ordered and directed L&T to hand over the association, hand over the corpus, so that the association can start functioning. So it is within 3 days from this order that L&T handed over the corpus and made over and allowed the association to function. And currently now I am the president of this association. This is how effective RERA is. That even L&T tried everything in its books to go against me. They filed a case against me in Bombay High Court for trademark violation, so many other things. But even after all of that, I could take the help of RERA to ensure that they hand over the common areas to the association, because they wanted to do it after the phase 3 is completed, which is yet to be completed. However, now we are already in the second year of the association. We were able to successfully now. It's a very streamlined process. So this is how effective RERA is.
On the other side, there is one more South City apartment L&T, 25 years old, is before the Supreme Court to transfer the corpus.
Is yet to be transferred.
Is yet to be transferred.
There is an administrator appointed there and the administrator there. So that was because
what is the interest of these
Corpus must be
for not handing over the
corpus
corpus?
thing.
Not handing over the corpus, the first thing is about the ego of the person who is sitting there. People have hunted his ego. Let me see how you will go forward, how you proceed. See, various aspects. Otherwise, for L&T it is nothing.
Yes, that's what.
For any builder, it's a liability.
It's a nuisance.
It's a nuisance, it's a liability. Okay, so it's all depends on. But why this has been shown on the screen is the traditional legacy system of following the civil code, district, high court, Supreme Court. It takes one generation. Probably your son, grandson could be there before those courts for you to get a justice. Versus RERA have a timelines to pass the orders, address. Of course, this also has a tribunal, high court, Supreme Court, so you have it. But it is more effective. It is the regulator to the real estate. What you should remember is the regulator in the real estate. If this businessman, the L&T or ABC builder has not done his duty in accordance with the law, he cannot go before the regulatory to seek further registration for the subsequent project. He said that go back and correct what you have done mistake already. Or you solve it, resolve it.
You are saying cases in Supreme Court.
That is a 25 years old, sir. It's a old before pre-RERA project. RERA cannot do anything. Okay. So this is what is important and the importance of RERA. RERA is not just a registration authority, it's a regulatory authority. Having said, tell me few regulatory authorities which you know. SEBI, Telecom, IRDA, Reserve Bank, SEBI. None of you said ICAI. What is right? So imagine SEBI is about 40 years old. When they started, they also looked into the SEBI as like all these brokers, all these agents. But look, SEBI, you sit there. I know how to do the business. Now SEBI is a different. Similarly, RERA is something like for us it is, we are not getting the importance of it, the impact of it, and also their powers which is vested in the Act. But over the period, that will be the future. Okay, so you should remember RERA is not a registration authority, only issue the registration number and do the compliance and do it. They are the regulatory authorities, entire powers are vested with them in terms of making the builder to deliver what he promised. So this is the importance of it. So look at that, the objective of the Act.
So before I go further, of course, RERA is not a magic wand that you can just do this and everything is going to become right. Supreme Court has recently observed that RERA has become a rehabilitation for retired IAS officers. So some of these authorities, of course, all over India are not exactly rendering justice, in the sense that though we have strict timelines like 60 days for a complaint to be disposed of and 60 days for an appeal to be disposed of, most of the authorities are hardly following it. They are also becoming like civil court. This is the flip side of the RERA. And also, because these are manned by these retired bureaucrats, most of them are retired bureaucrats. So the thought process and the lethargy is also there. So which means that, exactly speaking, justice is not being delivered, but nevertheless it gives hope to an allotee. It gives hope to a home buyer, and the home buyer can agitate on so many more fronts which could not have been done earlier, because the jurisdiction of a civil court to adjudicate was limited, then the jurisdiction of a consumer forum was limited to deficiency and compensation. But this enlarges, like the order that I got. In that order, in addition to that, the defect liability period got extended to 5 years from the date of the order, which means while L&T's liability would have ended in 2024, now it extends to 2028, which means it's a punishment for not handing over, because Section 17 mandates that you hand over within 3 months. It has not been done. So this is the better part of RERA. Though there is some amount of delay because of the bureaucrats being there, or because of the non-judicial members. Some of the very few authorities have judicial members as judicial officers or retired judges as the members in the authority. But otherwise, it's a very good legislation, and of course, the biggest thing is it is disciplining the promoters. The financial discipline is the biggest thing, which is also because many of the promoters who are not compliant are failing now because of the financial discipline that this is brought in.
It's cheaper also.
In terms of litigating, yeah. Litigating is very cheap. I have seen a single line complaint being adjudicated, an order passed. Just a single line. Nothing else is there. 2 documents in a single line, an order is passed. So that's how simplified it is. Mostly, I don't know, Tamil Nadu must be manual. But otherwise, all other states, it's an online complaint. Sitting in the comfort of home, you can file a complaint, and 1,000 rupees is the fees, and you can agitate for anything. So, with this,
yeah. So I wanted you to listen this next 30 minutes, 45 minutes, or 60 minutes of this session about RERA. Looking at this as the objective of this Act. Any provisions we talk about the RERA has to achieve any of this objective. Then you appreciate this piece of legislation, because the Act itself is a radical. The provisions of the Act itself is a radical, because 70 years we lived in one way. All of a sudden, if somebody to say that you live in this way, is impossible to accept. Forget about the builders. Buyers are not accepting this. Even though it's more beneficial to the buyers don't accept it. So to that extent, it's a radical act in terms of that. So in order to appreciate that, remember these are the objectives to achieve by this act. Any provision, either of these objectives or multiple objectives are achieved. The accountability, responsibility, governance, faster dispute resolution, regulatory mechanism, symmetry of information available across. So whatever we talk about RERA and the provisions of RERA, either to achieve one or multiple objectives of this act. Next.
So when he says allottees as buyers, we don't accept, because information is necessary to be given, but unless you ask, you don't get it. So that's how the as allottees, as home buyers also, everybody has to be aware of this.
In the interest of the time, I'll just go a little bit speed in terms of the basics of it. You got some handbook, right? Handbook about the act and also the content of it, provision. There are 10 chapters, 92 sections, and which is effective from 2017, 1/5/2017. RERA being the central act, land-related legislation belongs to the state. However, RERA has made it as a central enactment, given the power to the state to frame the rules, also appoint the authorities to regulate and also develop this industry. That's how this act is. There is a central act and the state rules. So as we as the students of Chartered Accountants members, we know that state rules cannot bigger than or bypass the act. So to that extent, act is there, and 2016 was the notified, effective from 1/5/2017. 7 years is over. We are on the 8th year. 92 sections. None of the sections are amended. None of the sections are amended.
Likely to be amended very soon.
Likely to be amended soon, but there is a lot of pressure on the government not to touch unless it is a practical problem to achieve. The reason is this industry is influenced by huge. Understood? What could be the huge? In spite of that, not able to touch any of the provisions of the act is something which is a commendable commitment by the government for the public at large. Yes, there are some challenges in terms of some of the provisions of the act for the builders to deliver it. Probably those things may ease out. Yeah, this is the structure of the organization of Tamil Nadu RERA. There is a chairperson and minimum 2 members should be there. Below that there are multiple officers which is taking care of the related to the revenue documents, legal, town and country planning TCP like a town planner what we have seen in the morning, and also engineering section and finance and accounts. This is the structure because as I mentioned, RERA is not related to the registration. It goes beyond the registration. The authority requires all this knowledge while they grant the registration and also adjudicate the complaints if any.
So in terms of the adjudicatory mechanism, the regulatory authority adjudicates disputes relating to payment of interest and refunds and all other disputes that relate to violation of the provisions of the Act. So the adjudicating officer who is appointed, who is a retired district judge, hears complaints only relating to compensation. So this is the distinction between the filing of complaints and the adjudicatory mechanism. Yes.
So this is the travel of the Act 16, draft 17 notified rules, regulations and also various orders or the notifications, circulars notified by Tamil Nadu RERA. We'll go next. Yeah. Some of the important provisions of the RERA, as we know that like when we hear about real estate, what is that you get? What is that it comes to you? I know that you are not sleeping, right? Developing land into what? Apartment or plots. Then what? Approvals. Then sell it to the customers at the higher value. Then what else? When you hear about real estate, organized sector, Very good. Good. Wish. Then. Cash component. Then. What else you will listen? Or when you say about real estate? Black money. Say loudly, sir. Then. Value. Then. Litigation. Then.
Gunda, sir.
Cheating.
Gunda.
Then. Double document. Stamp duty valuation, registration. What else?
You can physically experience it.
You can physically experience. Then.
Inheritance.
Gundas.
Inheritance.
Inheritance. Ownership.
MLA
MP. Okay. Then. Affordability. Acquisition. Right?
Continuous project time takes.
Continuously taken. Yeah. Ever pregnant, never delivered. Right? Affordable housing. Then. Can you see that various aspects of the real estate, something is bad, something is not okay. Probably our generation may accept it. Next generation may not able to accept all this. Right? They wanted to buy a home by clicking a button. So that is what they wanted to do it. Maybe they may not buy the property at all. They will live in a rented house, that is sufficient. Okay. So the future has to be secure in terms of they should have a lesser struggle in terms of owning this piece of property or piece of a house. So probably this act, this legislation give a hope that another 10 years or the next generation will enjoy the property in a litigated free or maybe the way that they wanted it. So that is a little more about real estate and what we see today and what intend to do in the future. To do that, as I mentioned, there is a regulatory authority regulate this industry. Starting from when? When will you buy, sir? An apartment? Then somebody gives advertisement. Then there is a need. Okay. Rather than at what stage you buy it? After they get approvals.
Once RERA complete, now you take.
Once RERA completes, you can take now. Right? What was pre? Before that?
You pay and wait. You have to pay the money.
Foundation itself, you have to pay. On foundation itself, you have to pay the money. Right?
And block your
unit. Right?
And you don't know which block you are getting.
At least you see the foundation, sir. Some celebrity comes, they launch it in a 5-star hotel, 3-star hotel, depends on that. Correct? Correct? No, I don't say that vanish. That's how the industry used to be. That is why I said it's a radical. Even we don't accept. What is wrong with that? There was nothing wrong, right? But now there is a standardization. One of the objectives, if you see that there is a standardization. The good complied builder will launch the project after receipt of all the approvals and have a clarity on the business. Where there is a builder who don't care for this compliance, even before entering into a JDA with a landowner, he would have been launched it. He don't know whether he'll get a JDA, whether he'll get a approval. There's a huge big difference between the who wanted to comply, who don't want to comply at all. So that made this industry to be having a different experience for different class of people. Now with RERA, everybody is standardized. As Sir said, get the RERA registration, then go to market. Have you seen any product which has come to market without a proper registration?
Now no.
Now no. Project, other than industry?
In other industries.
In any other industry?
It could be automobile, it could be food.
What is this? How much this cost? 4 rupees with profit of 1 rupee, 5 rupees rounded off. What is that? How do you buy this?
Expiry date.
For 5 rupees FSSI, expiry date, date of manufacturing, right?
Sir, this is going inside, sir. You have to see.
That's where is that going?
That I cannot buy again.
Acha, for 5 rupees you think of going inside. For 1 crore rupees it goes everywhere.
Organization is with the bank, not with us.
Not with you. Bank is giving a fund, not looking at the builder, sir. Your ability to repay it.
Yes.
nothing to do with the property. What I'm trying to tell you is our experience different in terms of a real estate. As I told, you will not agree, it's a radical. This is okay 5 rupees to check. I'm okay not to check for the real estate. Okay? Look at that. Now it's very important to bring the standardization, bring the transparency, make most accountable. Now the project should be registered before it hits the road or hits the market. That is the first place to look at that. So as a professional, how I should also advise, do not do any marketing, advertisement, collect money, invite person for a real estate project unless you register with a real estate regulatory authority. That is section 3.
So the whole purpose of ensuring that a project is registered is to ensure that a promoter is compliant, follows the requirements under the Act. So one of the foremost requirements under the Act is the financial discipline, which is the money that is collected from the allottees. So of which 30% of the money that is collected from the allottees can be used by the promoter the way the promoter wishes to. The remaining 70% has to be kept in a designated project bank account, which is declared to the authority, is visible for the allottees. So all money that comes in, that stays in 70%, that 70% this project designated bank account, it cannot be withdrawn the way a promoter wants to. The withdrawal is in proportion to percentage of completion of the project. And that has to be certified by all of you. That is, a chartered accountant, an architect and an engineer has to certify the percentage of completion, and a chartered accountant will also certify the eligibility to withdraw. So in fact, these designated project, designated bank accounts also don't have checkbooks. So it is only with the help of these certificates. When you go, some of the banks are very stringent in allowing promoters to withdraw this money. Also, this is the account which can be frozen in the event that a project lapses or the registration is revoked. So which means that at any point of time, the balance money which is not utilized for the purpose of the development of the project is still sitting there and not misused by the promoter. So at any time the project fails, the authority will have this account, and from this account, once the account is frozen, then the balance money is there to be utilized by the association of allottees who get the first right of refusal to take over the project. So this is the financial mechanism. So this safeguards the money. Like what Vinay was saying, that earlier projects would be launched, money would be collected, and a lot of times the promoters have vanished. So that cannot be done now. Of course, somebody who is non-compliant can still do that, but otherwise this cannot happen.
Why did they allow the 30% to be utilized at the wish of the, so that he can escape the penalty?
No, sir. He has to put some material foundation gain. You go for it.
I'll brief you more about this mechanism, how it works. Then you appreciate that why this 30 and 70. Number one.
Of course, initially the Lotte associations wanted it 100%. During the discussions, earlier parliamentary discussions, they said make it 100%, but then thereafter they said 100% will be too stringent, because they would have already, by the time they come to register the project, section 3 requires prior registration of a real estate project, acquisition of land, getting all the sanctions, and then the timeline from purchasing the land to coming to RERA registration, sometimes it takes 2 to 3 years. There's a lot of money that goes in. I'm sure that to ensure that there is some amount of buffer that is given to the promoters, this 30% is given, and it's not unreasonable.
So I'll come to you, sir, in terms of why this 30% also not to be part of this. Probably we'll go just one step back in terms of the registration itself. As I mentioned, it should be registered with the RERA authorities before they launch it. For a registration, generally what do you give, sir? To any authorities, what do you give?
Legal documents.
Legal documents.
And the structural
report.
And the
Plan, sanction plan. it is land is owned by anybody else other than the builder, then
He's owner movements of owner.
the title, basically the proving of a title, who is the owner of the land.
And the legal opinion.
Easy legal opinion related to the land flow, it has to be given. Then construction agreement with the MMDA.
Construction agreement, then only you can put.
Not the plan, the construction plan.
That only sanction plan.
Sanction plan. That's what they have given the terms of the sanction plan, how it should be built. Then, sir. What fee?
Both fees are fees.
Registration fee. Okay, understood, sir. Registration fee, second registration fee. Then, what else? What else? Stamp duty and purchase of the property at the JDA would have been incurred. What else you required for something to register with any of the government? Huh? TDS, no. TDS is what? TDR.
Online they have to submit with the.
So,
Possession of the land.
yeah, that is nothing but the ownership of the land. So, in order for you to go and register this document, get a registration, as a buyer, what all you expect to collect from the builder, all information you should provide, including the proposed agreement for sale you entered with the customer. This is a draft of agreement that I enter with the customer. The document you should submit. Do you remember there is something called standardization, transparency? Earlier, agreement for sale can be a 2 pages or a 200 pages. It all depends on how much fees you pay to the advocate. Now nothing doing. That agreement for sale draft itself is notified by way of rules. Everybody should follow. That is a minimum. Over and above you can add.
Sir, builder is a businessman.
Yes, sir.
Who commence any business, a businessman commences with the intention of making profit.
Yes, sir.
And a businessman to commence a business, he should bring his equity.
Equity.
Why this 30% it should be his
I'll come,
equity.
sir. I'll come, sir. I'll come, sir. Okay, is equity. I'll come.
Should be his equity.
I'll come, sir. Yeah. Sir, earlier even 30% was not there, sir. At least there is something about 70% is accountable.
We are trying to justify 30%.
No, I'm not trying to justify it. Listen to it. Okay?
He has got nothing.
Yeah.
Everything he robs
Nothing, sir.
4,000 and he does it.
His equity is far from the number of money.
That is his equity. That's only
Yeah. So these are the information you require. Whether you are building a 10 apartments, 1,000 apartments or 5,000 apartments, submit all this information, get it validated by RERA. They verify all this information. Then only they grant the registration. If something title is not good, they'll ask you for clarification. If the plan sanction is missing something, they'll ask for the clarification. You give a area statement, carpet area statement, which doesn't match with your sanction plan, they'll ask you the details. This is the flow which goes and the procedure which goes in terms of approving the project for registration by the RERA. As a chartered accountant, one more information should be given by the promoter is the cost of the project, estimated cost of the project. When we say estimated cost of the project, what is that? What do you mean by estimated cost of the project? Cost which could be incurred for the purpose of the project. So this project contains what all cost? Land cost, material, labor,
interest
and marketing.
Interest cost, right? So it's a cost, estimated cost of the real estate project has to be given at the time of registration itself. How many builders will calculate this, you tell me? How many builders have approached, sir, I have to give this estimated cost to RERA. Post RERA they are not approaching, imagine pre-RERA. Sir, 1 lakh square feet, sir, 1,500 rupees, sir, 150 crore rupees done. Where is the interest cost? Where is the administrative cost? So you should think that. So the authority is insisting you to submit the estimated cost of the project. You tell me other than chartered accountant who can give the better service to him to arrive at the estimated cost. What is the land cost? Again, what is land cost is defined in the Rule 4 of Tamil Nadu. you should consider as the market value of the data filing and application is the land cost, construction cost, which includes your material cost, labor cost, sales, all your approval cost, borrowing cost, interest cost. This is what is included. So at the beginning, how will a builder or a promoter think that whether I borrow it or not? If the sales velocity is good, they will not to borrow. If the velocity is not good, they may not borrow. So this interest cost is part of estimated cost of the construction. So this information has to go at the time of application. As a chartered accountant, you can involve, you can advise how do you do this. It's like a project report. So that is what is important. That goes in. This is very important for the two reasons. Based on this estimated cost of the project, he can withdraw the money from the project bank account on a periodical basis based on CA certificate again. Number two, this is a basis for the authority to levy the penalty in case of a non-compliance. These are two important aspects we should remember in terms of the estimated cost of the project. This goes along with the application before grant of registration. This is the basis for the chartered accountant to issue a CA certificate. In the handout material which is given, if you see that from the last 4-5 pages, there is a form number 3 and form number 7, everything is there, which is clearly mentioned about the estimated cost as per the certificate.
Can estimate be certified by chartered accountant?
Estimate will not be certified by a chartered accountant. Estimate will not be certified.
It will be prepared.
It will be prepared. And estimate would be given by the builder. Against the estimate, how much actually they spent, incurred based on the books of account, that is what we certify. Actual based on the books of accounts maintained by the promoter is what I certify it. That is what is part of the form 4. Continue with this. The 100 rupees collection, 70 rupees should go to the separate account, 30 rupees goes to his normal banking account for him to make use of it. Even the 70 rupees to be taken out from the project, when he will take?
Percentage of completion.
So first he should incur the money. Having incurred the money, the engineer architect certify how much is the percentage of completion, what is the value of the money, material, labor which gone into this project. Based on the books of accounts, he withdraw this money. It is like more of a reimbursement. First you incur, then come to me, I will certify, then you take the money from the bank account. Probably, sir, the 30% what they have given it, he will not have it. He would have been deployed it. To take back 30%, he should come to me and take the 70% account. So something which is inbuilt in the provision. At this point of time, everybody is happy with this 70-30.
Yeah.
Okay, probably when days to come, even promoter also says, why I should have 30%, let me put 100%. If I am true to myself, this money belongs to me at all point of time, I can withdraw it. That is going to be the future. So financial compliance is one is an important aspect under RERA, which is a radical change in terms of the RERA itself for this industry. Actually, it is not a new law in terms of this money to be used only for the project. Prior to RERA, there is some other laws, right? You have to collect, you collected the money and it should be used for the same purpose. Which is that law? Companies Act. Other than Companies Act?
Apartment ownership.
Apartment ownership is a proposed one. Contract Act. Okay, then PMLA, Prevention of Money Laundering Act. You have collected the money from the public for a particular purpose and that should be used only for that purpose. Have you seen the builders are arrested by whom first? ED. Why ED will come? Then police will come. So ED will be the first person to go to the builder to arrest because under PMLA. So even before RERA kicks in, the mechanism was there in place already in terms of usage of a public money for a particular purpose. So, but RERA made it a regulation now. There is a monitoring on every aspect. Probably ED used to come after the post. That's a more of a curative. RERA is becoming more preventive that. So that is what you should remember that now this 70-30 financial management. As a chartered accountant, we should advise this builder in terms of there is a law related to this, you should follow it.
One small doubt. On the 70% which is in the escrow account.
It's not an escrow account, it's a designated project designated bank account.
So, does he get any interest on that account, the promoter?
No.
So, nowadays the bank has, this is basically a current account. Bank keeps his money with them. There is a flexible deposit model. Excess money end of the day they transfer to the flexi interest model. Again, that deposit which transfer is part of this account only. They cannot take that money and use it for any other purpose. It is just a reflection of this money which should not be mortgaged. Again, that loan cannot be taken it. So that is now banks are permitted in terms of extending the interest.
Can he service interest out of 70%?
Yeah, good question is, can he service interest out of the 70%? Is the question by sir. Remember, I said estimated cost of the real estate project. Estimate is very important. What you can take from the 70% is based on your estimate. If you are not estimated the interest cost, then you cannot touch it. It all depends on what is that you estimated. If you deep reading of section 4.2 LD of the RERA Act, what you can take is what you estimated. What you have not estimated, you cannot take it. Number one. Huh? Chartered accountant. Yes, sir. So, estimated is very, very critical, important. That's what I said. Your builder, your client should sit with you to arrive at what is the estimated cost. It is not the construction cost. Beyond construction cost, you should put it your sales report, your project report based on the sales velocity, based on your receivables, collections, commitment, then whether you borrow or not. If borrow, what is the volume of the borrowing, what is the interest rate, what could be the outflow. Very important aspect of it is to be remembered about estimated cost. That is a basis for the withdrawal. Further, in Karnataka RERA, UP, Gujarat, Maharashtra, Telangana made it a point that if you borrowing for a specific project by mortgaging the land, that loan should go to 70% account straight away. Because you are mortgaging the land and borrowing the money for the purpose of the project, put that into 70%. Furthermore, responsibilities are given to a chartered accountant to verify whether he has borrowed first. Has he borrowed against the property, that project, not the property, project. Having borrowed against the project, whether money has gone into the 70% account. If money gone to 70% account, then no problem, utilization is in our hand. Because money has come inside the 70% account, utilization is in my hand in terms of when should I issue certificate to withdraw the money. This is not a practice in any other state other than these 5 states, because promoters are taking the money based on the project and using for any other project other than for the money. But it is a little, what I can say is a challenging for the business owners also in terms of about this class provision, but fairly all these 5 states are accepted it. That means to say that it's good to go with
but
this.
For the same bank account, the same bank itself, I will have this designated account, I will have the loan facility also. Same bank will keep the money, but you will charge interest on my loan.
No, sir. See, when will you withdraw the loan? When you need the money, then only you withdraw it.
Correct.
You will, because prior to RERA, take the money, invest for something else. If you don't need the money, you don't withdraw and put it into this current account. As a prudent businessman, I will not do that, right? So if it is needed, then I need it. Otherwise, I don't take the loan at all.
The cost estimation is possible, sir. Maybe part of the estimate.
Joint venture project.
Joint development.
Joint
venture project.
Where you have to pay to the landlord every 100 rupee, every rupee collected from the buyer. Is it being paid from the 30 rupees or 70 rupees? Which one will RERA or bank will allow?
So the question by the SAR is, in case of a joint venture or a joint development, landowner is different.
Basically a revenue sharing.
Yeah.
Under revenue sharing, in a model of a joint development, landowner is separate, developer is separate. Correct? And the agreement says that every rupee collected, 30 paisa should be given to a Landowner. That is the agreement. First thing we should remember is RERA doesn't differentiate who is a builder, who is a developer. The new concept of
Who's the landlord?
who is a landowner or who is a developer or a builder. It defines only one definition called promoter. Section 2 KZK. Okay, promoter. Definition of 2K has been like defined promoter, a person who constructs or causes to construct, which includes your landowner also. So it doesn't differentiate the landowner or the builder. It is required to register your project. The moment you register a project, project has a land, project has a development activity. For me it is one and only. For that there is only one bank account. For a project I have only one bank account. You withdraw based on the percentage of completion. Having withdrawn, whether you keep it, whether you give it to landowner, I don't care. What I care is about the project. Your eligibility to withdraw. Having withdrawn, you manage yourself. It's a contractual obligation between the landowner and the builder. How do you share the money having withdrawn from the bank? What I am concerned is about the project, following the compliance of the project. If it is your own land, what was your answer? So it doesn't differentiate the landowner or the developer.
Another point, because once you sign the UDS, undivided share of land goes to the owner, sir, payment directly, not to the promoter.
Sir, that is a practice, sir. That is a practice.
So that is the way the owner, joint developer will get the money.
Sir, understood, sir. But you have not done anything on the ground. You are just collecting the money. How can you take as a landowner? Because what is allowed is based on the percentage of completion of the project. If the project is not moved, on the day when you sold 100%, you mean to say you landowner, you take it and go away?
Then only construction agreement will be executed, not the UDS.
Understood, sir. Now the land, you say that initially you pay the land, you take the landowner, make the payment to the landowner. Landowner next day will go to Singapore. Litigation notice comes. So there is no concept of a landowner or a builder or a developer under RERA. It's called a project. It is called a separate account for a specific project and should be used for the purpose of that project. Collection of money, whether it belongs to landowner or a developer, should go to that account only. Withdraw that money based on the percentage of completion method, and having withdrawn, it's up to you to whom to pay, whether you retain yourself or you pay to the landowner.
Now, what about the statutory dues? Suppose you are collecting 100 rupees. It involves GST. It involves corpus EB deposit, something like that, some deposits and corpus fund. It involves so many other activities. So those things are deducted, then only balance 70% has to be paid.
Sir, the question of the SAR is statutory dues, more of a pass-through charges. Many of the authorities have clarified pass-through charges are not part of the 70%. It is away from the 70%. It is more of a pass-through charges. You collect and you remit it. If you collected, if you are remitted into the RERA account, you withdraw and pay it. That flexibility is there. It's purely an accounting concept. Pass-through charges, most of the authorities have clarified about it. Why I am insisting? It's a chartered accountant role in terms of advising issuance of certificate. Based on your certificate, the builder is withdraw the money from the project account. Promoter can withdraw the money based on CA certificates. So 30,000 project you should remember. I do not know who are all issuing 30,000 certificates in Tamil Nadu. From Kanyakumari to Coimbatore to Vellore to Tirunelveli to Chennai. Somebody should be issuing it. Ensure that it's our pipe. I should get a fees out of this, not any other person, any other professional. So this is what is important as a chartered accountant. We issue a chartered accountant certificate for every withdrawal of the money, for every withdrawal from the project account, and second certificate we issue on the annual audit of accounts. Audit of annual accounts.
Land cost is the main cost. Because you are square feet 5,000, 2,500, 3,000 goes for land. So you are only giving 30%. So what is the cost of action value? that is the legally will be brought in the builder.
Sir, question is, sir, land is a major cost, but what you are giving is 30%. What you are giving is a 30% where, say an example to appreciate, this is MG Road, Nungambakam, you are constructing about 100 apartments. My cost of the land is 80% because of the locality. 20% is only my construction. But what you are giving is only 30% to withdraw. You withdraw faster, the more you construct it, sir. The more you construct, the ability to withdraw would be faster. Initially it would be lesser. The more and more you construct, it will be faster. What you are realizing the land, the market value, you should remember. You are not doing the land deal. You are doing the construction, selling of an apartment. Okay, what you are realizing is the market value of the land. You just cannot take the land value and vanish it, leaving the construction activity to the heart. So that is the reason it has a complete mechanism in terms of this. Sir, this is tested across India for the past 7 years and it's working. Okay? Probably small there and here, it all depends on the place and the product and the quality and all the costing. But it is working for all type of the projects.
The auditor gives certificate, the cost of land.
Not auditor gives, which is says in terms of the rule itself, market value should be taken. That market value is nothing but your guidance value or SR value, which is to be certified by any of your sub-register, that you take it as part of this.
But they cannot be taken from the sub-register.
Which one? You can take it. Cost of the land you withdraw based on the percentage of completion.
The land, the proportionate cost of the land also gets withdrawn.
Not only the construction,
in those stages. So, except for Madhya Pradesh allows 100% withdrawal of land cost at the beginning itself. And Tamil Nadu also it is the same thing. So, probably Tamil Nadu I believe is also the same. So, Tamil Nadu allows the land cost to be withdrawn upfront. So,
most of the states, see, I'll tell you, so most of the states had it. Over the period, the state which has affected with this has made the amendment to the forms. Tamil Nadu is still not affected, so we feel that Tamil Nadu has a very good builders, developers. So probably, yeah, not registered at all. Okay. Yeah.
Okay. So,
for the purchase of the land, if there is an agreement for purchase, and if the price is more than the market value, I mean,
the guidance value.
That can be taken as a cost.
That can be taken, yes. In the estimated cost, whatever is the either the actual cost
or the
cost of acquisition or the whatever is the guideline value that is fixed by the government, if it's an ancestral property. So, in addition to just like the Apartment Ownership Act, there were earlier also there were other acts. In Karnataka we had Karnataka Ownership Flats Act 1972. MOFA was there in Maharashtra. I'm not sure whether Tamil Nadu was there. What was lacking was a regulator. So if you see the provisions of COFA, MOFA and RERA, about 80% of the provisions are just the same. Earlier also there was a bar on a promoter to receive money without obtaining sanctions. So, however, there was no regulator, hence it was not regulated. With coming of RERA now, that has become regulated. So, I think we have taken a lot of time already.
Extension.
So, the validity of a registration, when you take a registration in the section 3, under section 4.2 LC, you give an end date for the project. That is, there is a start date and there is an end date. So within that period, the development works in the project are required to be completed. If you do not complete within that, then under section 6 you can seek for extension of only 1 year. Of course, this extension according to the Act is only a promoter is eligible to take the extension only in case of force majeure conditions. Otherwise, the extension is not required to be, it cannot be granted under the provisions of the Act. However, considering the fact that the effect of non-extension would mean that the project lapses and then the registration gets revoked, which means that then what do you do with the project? So considering this difficulty that if a project extension is not granted, and only is considered only in case of force majeure conditions. Most of the authorities are lenient. As a general rule, extensions are being given. So once a registration, the end date lapses and the project is not completed, an application under Section 6 has to be filed by paying the necessary fees. I think here it is 15% of the project, 10% of the project fees, which is quite high. In some places it is half the registration fee. So a promoter pays that fee, files an application, obtains an extension. So as a professional,
It is for the government revenue.
It is
for government revenue.
It is for government revenue.
What about the person who booked the flat?
Persons who book the flat, he also gets benefited because when he enters into an agreement, the end date that is given at the time of registration would also be the end date in the agreement for sale. If the promoter does not deliver within that time, the allottee gets a right to withdraw from the project by taking back the money, refund along with interest, or continue to stay in the project and become eligible to receive interest, monthly interest on the delay. So in fact, Tamil Nadu also makes it specific to mention in the certificate that when extension is granted, that the rights of the allottees under the agreement does not get affected. So which means that the allottees are not, the home buyers are not affected by this extension that is given. Extension does not alter the terms of the agreement with the home buyer. So this is regarding the extension. In fact, now the authorities are also giving further extension by utilizing the provision that Section 7 subsection 3, where the discretion is given without revoking the project. The promoter is being allowed to continue the project because the other option is under Section 8 that the authority should consult the appropriate government and also give a first right of refusal to the association of allottees to take over the project. So which means that it's a big that cannot happen because one appropriate government is the state government, and then that it will not take over the project. Even the association of allottees cannot take over the project. So further extensions are also being given for the projects.
The importance of this end date is again back to the professionals. How do you give the end date in an application for registration? It's like asking a question, when do you clear your CA final? So when do you give a end date when filing the application itself? Past experience. How I have written the last exam preparation decides how we get my current year examination. So all your past projects, whether you have delivered every time on time to your customer or you have delayed any of the earlier projects, will decide how much time I required for me to complete this project. All along you have delayed 2 years. What confidence you will have to put the same confidence in this project also? Ask the customer, your builder, tell him to put 3 years end date extra because of his safety. Otherwise, if the project is lapsed end date, again he has to go back to the authority, file an application for extension of the time, pay the fees, pay my fees also. Okay. And along with the documents, get the extension.
There are some reasons why can you give 5 years for completion of project.
No. See, I'm just telling you. No. What? Sir, that is what you did all the years, sir. You know that you can't pass the examination. No, that's how all along you never come to home at 6 o'clock. How can you say that from next week I'll come at 6 o'clock? Right? So that's how it's all about that. Why I'm trying to tell is, your past experience will tell about what is that you're going to do next. Because what is that you're able to deliver is only what you can promise. What you cannot deliver, you cannot promise. That is RERA.
Because of RERA, people are not going for multiple projects. They are going one by one.
That's good. Exactly. Also, it makes financial sense to give a longer date because the liability, if you don't finish the project within time, is so much more. Because imagine if you have 200 allottees paying them interest month on month becomes huge. And there are in some projects, of course, not all the projects allottees get into a litigation, but in some projects, promoters en masse have ended up paying, or giving them credit notes by then giving them discounts. So that is why, as a professional, if you are advising a promoter when to give the end date, take the maximum time. If you can give 5 years, give it 5 years. You can complete beforehand. Nobody will have a problem if you
RERA will evaluate.
RERA does not evaluate. RERA does not.
That you have to balance it.
No, that everybody is doing today.
Perfect. Sir says, if I give a 5 years to my customer, whether he will agree.
He will not book the flight.
I'm just telling you, you should balance it.
So it paves the way for
professionalization.
professionalization.
No, that is the reason. Agreement mentioned 3 years as the end date. I take a 5 years permission from the RERA.
No, that is rarely being done now. Anybody who gives an end date in RERA, the same end date is also given in an agreement. Nobody complains if you give it beforehand. You always complain when, oh, he said 5 years, but he finished it in 3 years, and he a very good promoter. So that's how it is. So it's a good thing now. All the promoters, of course, the ones who we advise and we see, at least the large promoters, they take the maximum time. So that's what, if you are advising anybody, that's what you should also do.
Furthermore important is section 11 mandates now the stage-wise completion of the project to the authority. That means to say that when you put the foundation, when I will complete, when I will go with the slab, when I complete plastic, that means to say you have to give the activity chart as part of your application. Section 11 mandates it. Section 11 mandates you to display on the website of the portal of the project. When you plan yourself in terms of it is not today one, on 36 months I complete. How do you complete? Stage-wise completion of the project. Based on the stage-wise completion only you can demand your installment also. This part of RERA now. Earlier, few bidders were doing, many would not be doing it. Now everybody has to follow it and practice it. So this will give an idea when can I tentatively, if not 100%, at least 90-95% I complete the project by that time. It is important. That is the importance of the end date, extension, further extension. If you don't complete, which is the due date.
What is the liability for
delay? In case of a delay,
in case of delay, as such, the authority doesn't penalize you, but the allottees do penalize the promoter. The promoter becomes liable to pay interest as notified under the rules. Here, I think it is SBI and MCLR plus 2% for every month's delay from the date of the respective payments until handover.
Compensation for the delay.
Compensation for the delay by way of interest.
Actually given.
It is being given. Complaint can be filed, and
Only after the complaint is filed, or is it?
no, only after complaint is filed. Only after complaint is filed. Like I said, some of the promoters are forced to give credit notes, are forced to give discounts, and have also paid interest. So those ones who are little prompt, they have also done that. Otherwise,
exactly.
Allottees have to be. There are allottees. Most of the allottees are aware. Every authority has about 10,000 complaints. So yeah.
So it all depends on how much like.
So when you make a promoter has to pay it, who is the promoter?
The promoter is the person who registered with RERA is a promoter. Basically, person.
Can be the developer as well as.
No.
Okay. Just to give you the definition, under the Act, a purchaser is referred to as an allottee, and a developer is now referred to as a promoter. So a promoter is nothing but a builder, developer. All of them are now called as a promoter. It's not the promoter as a company promoter. So this is a promoter who's, what we are referring to as a promoter is a developer and a builder.
Owners own.
Landowners are also now.
You told sometimes.
Yes, promoter include everybody who promote this individually, jointly, and register under RERA as a project.
So in case of
Application has to be signed by joint landowner and the developer.
Yes. So in Tamil Nadu, if both are signed, then both the share of the unit can sold. If landowner says that I will not sell, his unit share cannot be marketed. If both are signed, even I want to sell my units, then he should also sign. Otherwise, these units are blocked. for not for marketing.
What?
If the landowner not willing to sign the affidavits,
that is in Karnataka.
No, here also.
Here also. There is a joint
Tamil
development.
Nadu also. If you don't sign, authority says that I will not allow you to market that.
In fact, the bank account directions in Karnataka recognize only one account. Even in case of a joint development, the landowner, the money collected by the landowner is also required to be deposited into the same account. Of course, in practice it is not there, but however there are directions. So if you see the definition of promoter, a person who constructs or causes to be constructed an independent building. So who constructs is a developer, who causes it to be constructed is now the landowner. In fact, we are discussing one or two decisions also where the Supreme Court has held that the landowner is also liable, even Bombay High Court has held that the landowner is liable for the penal provisions of RERA where on the delay or any violation. Yes.
So furthermore important as a concern advisor to advise the landowner, don't sleep at the home by giving your land to a developer. Ensure that whether he is following what is promised in the RERA registration. Don't wake up on 48th month and go and see where is my dream house or a dream project. No, you are responsible because your land you are given to a developer. So you are more important than the developer. So landowner has a more responsibility than the developer holding the land developer to deliver it. Because as a customer looking at this joint development agreement, I am buying it. As a landowner, you are demanding something from the developer to develop and deliver it. As a customer looking at this, I am buying it. So you are equally responsible. You can't say that. Huh? Whatever may be, sir, you just given a power of attorney. Developer is an agent of a landowner.
Consideration, he takes some cash and some flats. Can he use power of attorney? Totally, the builder is responsible.
So as of now, builder is responsible. If the builder failed to act upon, then landowner also become responsible. It is not only your
A1, A2.
A1, A2, yes. A1, A2. Sir, you are married, sir. There is no husband and wife now. It's a family. Okay. If it affects, it's entire to a family.
What if a project is not registered?
Project is not registered. How many times you have not registered your vehicle and brought on the road? You tell me.
No. Her question is what is. No. I'll answer that. In recently, so if a project is not registered and it is a registerable project, you still can file a complaint before the Real Estate Regulatory Authority. But the relief while you are seeking, the first relief you will seek is register the project, direct the promoter to register the project, because the authority gets jurisdiction to allow the complaint to be prosecuted only upon the project being registered. We have filed several complaints like that historically. In fact, one of the judgments of the Madras High Court, this is the judgment I regularly refer to in such cases where the rules, the RERA rules, permitted certain exemptions. This is where it said that the rules cannot be in derogation of the Act. So I have cited this, I used this judgment of the Madras High Court in several cases to argue that even in Karnataka there are certain exclusions given for non-registration. So if any promoter who has not registered, you can still, it doesn't mean any project which is not completed as of 1/5/2017 or which is developed subsequently, if it is not registered, still there is some violation. You can still go ahead and file a complaint, but don't fail to ask the relief of directing the promoter to register the project. That should be the first relief, and then consequently all other reliefs. Sumoto also they can do. If a project is not registered, if they see an advertisement without a registration of a project, I have answered Tamil Nadu RERA where the advertisement was issued for 8 projects by a promoter here, saying that none of the registration numbers were given. The TN RERA has issued a notice saying why penalty should not be levied on you for registering non-registered projects. So authority also has sumoto, but it does not pick and choose. If it comes across some advertisements or something where it is visible, then it issues the notices. Yes.
Furthermore about the registration, in my knowledge, Tamil Nadu doesn't have an unregistered project unless it's a small project. The reason is Tamil Nadu government has given issued a notification to all the sub-register, stamps and registration department. If you register any unregistered project, you are personally liable as an officer. That is why you can see 30,000 projects.
Tamil Nadu and Orissa.
8 units or 500 square meters. That is a threshold. Anything more than 8, more than 500 square meters of the project land required to be registered under RERA. That is a section 3. Just we have moved because we felt it. You can read little more. So number 2, as every buyer insisting for a RERA registration, every banker are registering for a RERA registration. Every vendors are asking whether you are RERA registered or not, having failed, having supplied the material. If you get into any problem, then I don't get my payment. Imagine a vendor is asking a RERA registration. Apart from the housing finance company, lenders, who else is left, madam? So there is a circumventing every builder to get the RERA without say, and it maybe
500 square feet is for the land.
500 square meters is the land.
Or 8
units.
More than 8 units.
More than 8 units.
You had a question, sir?
Yes, sir. Sir, about 10 years back, some 100 acres, a promoter is selling. Now he has not fulfilled any of his promises. Till date it is open. And he has gone, the roads which he is supposed to lay, okay, everything is there. And whatever the regularization fee for all these...
This is a plotted development project.
Yes, sir.
This is a plotted development project.
It's a plotted
development project in Tamil Nadu. You have one problem. You don't have the concept of a final release, or you don't have a concept of a completion certificate. Mere obtaining of a layout plan is sufficient. There is no completion that needs to be reported. Why I am saying this is that under section 3, the projects which were required to be registered or those projects which had not received completion certificate as on the date of the commencement of the act, that is on 1/5/2017, if there was a completion certificate, if there was no completion certificate, then the project would become liable to be registered. But in your case, this 100-acre development, he will have a layout plan sanction.
There is no sanction. I mean, he took up
then it's an agricultural land.
Agricultural land.
Then RERA doesn't cover agricultural land.
He applied for regularization and CMDA approval actually.
Yes.
Okay. So then that is pending now. Okay, that is not being done. So it's still outstanding for about...
I'll give you my phone number, sir. Please call me.
Sir, basically, as of now also it is not able to register it, but you would have been sold it earlier.
He sold it, and the regularization has not happened.
Not happened. That whoever purchased has purchased something which is not a plot at all. Even as a buyer, I should have been...
Any project which has a plan sanction can only be registered. Without a plan sanction, it cannot be registered. So we'll have to check that.
There are promoters. They are having SPA. So they that is a special purpose vehicle, SPV. So they can escape also from that easily. One project means they can have multiple projects with multiple models of land.
So what happened in terms of the technology?
Is there anything RERA doing in that?
Technology which RERA adopted is, it collects the detail of the promoter, this is a SPV as a partnership LLP, who are the partners there, their PAN number, Aadhaar number, phone number, mobile number, mail ID. And when you become a partner in another SPV, all these are read and through the message stating that in the previous project you have a 10 complaints, please resolve it and come back to me for the new project.
Because ads are coming in one company, for example. But when I release the check as a buyer, when I go as a buyer, I give some other name.
That is not when you do like that, buyer should be beware of it. When you say I want to marry this girl, I want to marry this girl.
Branding is the same, no? For all the project branding is the same, but SPV is different.
So as a buyer we should be aware of it. I can't invest, can he cheat like that, sir? Unless I get cheat myself. He's showing this land and you pay for this.
Suppose for example, say like XY company is a familiar company which has run 100 projects in city.
Yes, sir.
They come in branding. But 100 projects is not with the same person. So with different SPV they go. So they can declare that SPV in the ad, that's what I'm saying.
Sir,
Not in the advertisement, no?
As a buyer, sir, as a buyer, before you pay, at least you get some document, their plans, options, and a RERA registration.
No, that if I go, I will do that. I'm just asking about anything RERA is doing on this.
Sir, RERA, all the details are given on the website. If you want to buy in this project, go there, check the website and buy it. They will not come to you and see that how on the ground what's happening. They can't do that on the ground what's happening. At max they can show you what is there. As a buyer, I should exercise some more effort for me to go back and see what is that I am buying.
In Karnataka, every promoter is required to declare the previous projects that they have developed. I'm not sure in the Tamil Nadu application it is there.
Not there. As part of the website, it is mandatory.
It is mandatory. So, in other states, you can see the track record and the status of those projects is also seen, whether completed or delayed, you can see that. So, that way you can see the track record. Otherwise, it's the buyer beware, we give it and that is there. So, that is.
Joint development projects, they register under RERA. To RERA insist JDA agreement to be registered because in Tamil Nadu it is accepted.
Now at this point of time, Tamil Nadu also not insisting.
No,
sir.
in fact it is not a mandatory registerable document also. Under section 17 of Registration Act, other states, because you are paying a huge stamp duty, you are presenting it for registration. Because the stamp duty payable is quite huge. So that is why the registration is also going through. Otherwise, under section 17 of Registration Act, it is not a mandatorily registerable document as such. But Kerala is insisting that it has to be registered. Karnataka also insists that it should be registered. But there is a slight loophole, I should say, where revenue, where it's a JDA, where revenue sharing is there, that is not being registered even in Karnataka.
Here, many builders are not registered.
I'll tell you in Tamil Nadu practice, sir, as long as you know the person, they are not registering it. You ask the Godrej, you ask the Tata. People who generally come from outside and wanted to do a business, okay, generally they register it. They don't want to take a chances of this. Okay, they don't want to take a chances of it. Other states, the challenge is the buyers are outsider, builders are outsider, landowners are only local. There is a less trust there. But as you mentioned, in Tamil Nadu still trust is more. So that is why not registering all the documents, but going forward they will register because the loyalty level has been come down as a human being. Okay, greed is increased, so nobody will take the challenge of it. But it's going on as of now.
But it's the authority. But Tamil Nadu is not insisting. Not insisting.
Also, Stamp Act also does not say specific rate on which the duty is to be there on.
That is not the case in Karnataka. Karnataka
all other states
pays 2 plus 1% of the value of the total value of the developed area. So it's quite huge. They pay crores and crores of stamp duty. So when they pay so much, they might as well register it. Kerala has specifically asked for joint developments to be registered now because that also was practicing. There was a practice of not registering the JDA, which was leading to problems. But that's why it is being.
Probably 1 or 2 problems will get this out. Okay. In the interest of the time, sorry, you have to tell me how much.
We have 15 minutes time.
10-15. We have next speaker is here. Ganesh sir. On the way. Okay. Then I am saying. Yeah, sir. Okay, fine then. So. See, the very important is in terms of the registration compliance, money withdrawal compliance from the chartered accountant. Next is the audit of annual account. 6 months from the end date of the year is the annual audit of the accounts of the project. It is not the project account to be audited, not the entity audit to be done. So, how many of they maintain the project-wise accounting is important. If they are running a challenge is if you have multiple projects, whether they have multiple project accounting. If they have a multiple business, I have a tea business, hotel business, coffee business, real estate business, lending business, whether I have a separate account. So it all depends on how the books of accounts are maintained. I recommend to implement the project-wise accounting to your client because that becomes easy for you while you issue the annual audit report under RERA in Form 7. That's very important for you to do it. This is one more opportunity. So 30,000 projects, at least about 5,000 projects should have been issued with this, remaining have been completed. So some of you might be issued or others.
30,000 into the number of quarters. So it's huge.
They're not
Every quarter, every release, every time you want percentage of completion, you are issuing certificates. So which means that there are about 1.5–2 lakh certificates which are already issued.
Your calculator is not sufficient to calculate what is the fees that is generated out of
So we'll go further. We of course we'll talk about some of the decisions now, which are so to speak important. So this is a judgment of Maharashtra, where the regulatory authority of Maharashtra held that even a development manager should register as a promoter. Of course, Maharashtra being at the forefront, this view may not be accepted by all the other authorities, but this is one of the things where a development manager, which is Shahpurji Palanji, was also required to register itself as a promoter of a project. A development manager is one. A development management agreement is entered into between a landowner and a promoter, where the landowner and the development manager, where the development manager says, instead of being a contractor, it says, I will lend my name, I will also take care of the construction of the project, I'll also take care of the sales, I'll do all activities, but the method of, instead of sharing the revenue or the area, it will say, give me so much percentage of the gross revenue. So they say, I will take away 12% of the gross revenue, that will be my development management fees. So it comes in as a development manager. These kind of developments are happening, even in Bangalore they are happening, even in most of the other cities. I don't know if it is not happening in Chennai. So a development manager comes in, a contractor or a prominent promoter, like Godrej has developed a project in Bangalore as a DM model, the development management model, where it takes certain percentage of revenue.
He's also a promoter.
Now Maharashtra has said that he is also a promoter. He should also register the project.
There is a non-work brand, people are buying it. Okay, that is the reason.
Long leases, of course.
Now, which is more evident after this Tamil Nadu Apartment Ownership Act, 30 years lease, which at par with your ownership, you become a member. Probably the Maharashtra again says about in the Lavasa Corporation, long leases are also equivalent to a RERA. RERA is there, but especially Tamil Nadu has issued a notice to all the sub-registrars, do not register a lease document without a RERA registration. Correct? Then I am noticing. Okay.
Even further than 30 years.
See, that is what Tamil Nadu RERA did it. Okay, but IGR says nothing doing. You do not have a power to issue a note, a direction for me not to register the lease documents. So that's a pending. But Tamil Nadu is little more aggressive. Even for 2 years, please you come and take the RERA. But that is not the intention. Intention is if you are paying equivalent to a property cost, then that is called a lease. Generally about 30 years long leases, equivalent to a cost of the property would be there.
Even so, means a house is let out for 2 years or something like
Not
that.
2 years.
Not the real estate property.
No. Yeah. The next is again in RERA Appellate Tribunal, where it held that even industrial plots, development of industrial plots are also considered as real estate projects and required to be registered under the provisions of the Act.
Even it's a government agency.
Even government agency. The definition of a promoter, if you see, Apex, cooperative societies, government bodies, so even in Karnataka, in fact,
Lidco is important. Your CMDA develops some plotted development, they are also
even in fact, Slum Development Corporation is required to register the project. Central government is not issuing funds for them. They say unless you go register under RERA and come back, we will release the funds. So that is how much.
So by that time, like the question may be, as we see the registration, extension, financial management, quarterly progress report has to be filed on every quarter. Section 11 mandates you to file the quarterly updates, quarterly progress report, which includes the progress of the development of the project, sold and unsold, what is the money collected, what is the money deposited into the bank account, and any litigations on the project plan. This is a major information you should submit along with the photos and the professional certificates to the authority on quarterly basis.
that is very important for the authority to see the progress of the project. In many of the states, this information is open to public for the customers to view also, to observe what is the progress of it. Still, Tamil Nadu is not releasing this progress report to the public view. So then we have seen the annual audit. Then you do that registration, quarterly, annual audit, develop the project, obtain the NOCs from time to time. You reach a place of a completion. So completion is something you develop the project in accordance with whatever be the specifications, promises you made to the customers. That is called a completion. On completion, take the necessary completion certificate to the planning authority, architects, engineers. Go and submit to the RERA. I have completed the project in accordance with what I have promised and placed in the planning authority, which is a completion certificate. And that is the end of your relationship with RERA in terms of the compliances. So this is a project life and the relationship with RERA from the beginning inception to the completion. In between, few things about the association and the DLP.
So 5 years maintenance period also.
Then he will start. He will start.
There is no maintenance period exactly, because now the two things are there. One is that under section 17, the apartment or the plot has to be conveyed within 3 months from the date of obtaining the completion certificate or occupancy certificate, along with the possession of the common areas to be delivered to the allottees association. So when is the allottees association to be formed? Section 11.4e mandates that when majority of bookings are completed, the association of allottees should be formed. So which means that while the project is being developed itself, the association of allottees should be there, but that again is not being followed. But however, the association of allottees should be there the moment the project is completed, and the handover of the common area should happen. Just like the case where in my case, if the promoter does not hand over the common areas, because the defect liability period under section 14.2 extends to 5 years from the date of possession being handed over. So in that case, for my apartment, my possession I would have got as on the date of the sale deed, but common areas, unless it is handed over formally to the association, till such time that doesn't get handed over, the defect liability period extends. The defect liability period under RERA is 5 years.
From the date
for
of
any structural defects, for defect in workmanship or services. All these three are covered under the defect liability.
5 years from the date of handing over the possession. So earlier the better. Common area.
Common areas as well as the apartment
area.
Also the apartment.
No, apartments, somebody they will give earlier also. Common area.
Earlier they cannot give now. They have to obtain the occupancy certificate and only then give. RERA there is a bar that you have to obtain the occupancy certificate.
70% flats may be sold, 30% will be remaining also.
Remaining from the date of handing over of that 5 years old, sir.
5 years, okay. Did I answer your question?
That itself should be finished.
That itself defect liability I am talking about. In case of a structural defect, workmanship, quality of the material used, obligation of the promoter is 5 years from the date of possession. Even your apartment, single unit, if you have a problem for 5 years, which is related to the defect, you should prove it as a defect. We can't go and say that I broken something and I go and say that it's a defect.
First you have to tell the promoter that this is the defect. Then you have to issue a notice saying that this is the defect, I am going to rectify it, this is the cost of it. If the promoter does not carry out the works, then you carry out the works and then you file a complaint before RERA claiming compensation for getting the defect rectified at your cost. That is the process under RERA.
Sir, but generally the structural guarantees are all much more than 5 years, right?
No, it is only 5. Earlier it was 1 year, now it is 5 years.
Now, why I am saying that in the milestones, you are saying even the architects have to certify the milestones, right? Apart from the chartered accountants.
Stage-wise completion. Stage-wise completion.
Does it is about the completion or the quality of the material?
Completion.
Only Maharashtra gives the structural stability certificate. What is the material they use, what is the standard they use it, and more so when you obtain the plan sanction, as an architect they give what is the standard of the building construction, sir. Generally, the structure is taken care. I don't think any building have collapsed in Chennai or in Tamil Nadu.
No, we have complaints. Huh? We have complaints saying that 12-year 12-year flat.
Yeah, one
ceiling is falling out.
Nobody wants one collapse.
The ceiling is falling after.
No. The RERA as such under either the architect certificate, engineer certificate, some of the authorities are asking for a structural stability certificate, but nothing in terms of saying that whether the quality is good. You only have recourse under section 14(2) to go against the promoter to seek for defect liability in case you find a structural defect. So that is the recourse under RERA.
That is within the 5-year period?
Within the 5 years period from the date of handover of possession. So if you take possession now of the apartment under the sale deed, from now, whether you occupy or not, it is 5 years from that date.
So that is why more important to consult Sujatha madam to do the photo audit. When you take the possession, you should verify whether the structural standards are followed. Okay? So either of you to refer any of your client to either of us. In order to get the services of the handover, litigation, CA, architect, engineer.
We have a couple of more minutes. So this is when we were saying landowner is also held responsible. This is the recent judgment of the Apex Court, where the landowner had revoked the power of attorney and said that I am not liable for the acts of the promoter. However, the Apex Court said your responsibility does not cease merely because you have terminated the power of attorney. You have not done anything to go against the promoter in respect of the joint development agreement itself. Having terminated the power of attorney, you are not absolved of the liability, is what the Apex Court held. In fact, this is a very recent judgment. This is in August. Of course, New Tech is a landmarks judgment where many questions were answered by the Apex Court. So, whether the retrospectivity or the retroactivity of the Act was answered, it was held to be a retroactive enactment and not a retrospective enactment. And the question of jurisdiction, like I explained earlier, who has the jurisdiction to adjudicate upon the refund and interest and the compensation? It was this judgment which said that it is only the authority which can adjudicate complaints relating to refund and interest, and the adjudicating officer who can adjudicate complaints relating to compensation. The third question is, of course, the authorities, the chairman and members. Maharashtra started with having single benches. That question also came up before the Supreme Court in this case, where it said that the authorities can delegate powers to individual members to hear the complaints. So by virtue of it, now we have in Karnataka we have 6 benches. We have all other authorities are also hearing complaints individually. The chairman and the members are also hearing complaints individually. So when an order is passed of a refund or interest, the promoter, if the promoter intends to challenge that order, the Act prescribes that he has to deposit the 100% of the money. That was called in question. So by the Supreme Court in this judgment said that yes, it is mandatory to deposit the 100% of the money awarded and only then challenge the order that is passed by the authority, which also means that 98% of the orders that are passed are not challenged because they don't have the money. When they don't have the money to complete the projects, they don't have the money to deposit the money and challenge the orders. However, in case of penalty that is levied under the Act, be it for violation of the non-registration section 59 or any other violation, then the amount to be deposited is 30% of the penalty awarded. Only in case of the money that is awarded, in case of refund and interest, 100% has to be paid. It is by virtue of this judgment. Allahabad High Court has already held it, but this was asserted by the Supreme Court also. So, of course.
Pioneer Urban. Okay. If somebody wanted to, when the Act has come into force, all the sections have been challenged before the Supreme Court, and probably about 60 senior counsel engaged by various developers. Senior counsel, you can say Abhishek Singh, and you name it, everybody part of this judgment.
Not this one. That is Nilkamal.
Sir, Nilkamal. Yeah, Nilkamal judgment. It is a first Supreme Court, where all the High Court Supreme Court has transferred the case to High Court.
It is sent back to Bombay High Court. Bombay High Court upheld the validity of all the provisions except for making one small change. It said that in case of the real estate appellate tribunal, let there be a judicial member. So that was the only thing it said that it has to be done.
This way, no amendments so far.
So otherwise, time and again, some of the provisions have been challenged, but all the courts are upholding. In fact, in that judgment in Neel Kamal, it said that the date given in the agreement for the end, it has to be that same date. You cannot read it through the contract. So I am not able to argue that how can you just say take the date that is given, whereas all the other provisions give me protection, like force majeure includes everything in the older agreements. But that we are not able to argue because Neel Kamal said the date given there is the date so you have to hand over. I think we have run out of time.
Yeah. So with this we are concluding. There is a lot more to talk, and in the constraint of the time, we are concluding this session. We'll take a tea break. After that, Sir will say, I'll take your vote of thanks.
I'm sure all of you would have really enjoyed this practical, informal, and very one-to-one like session where all of us could participate in the deliberations. So on behalf of SIRC and all the delegates present here, I extend a warm thank you to CA.Vinay, Thyagaraj, Advocate Suhail, Ahmed, and also the other speaker who stayed back and took part in the deliberations, CA.Sujatha. Thank you, thank you, thank you. We break for tea for 10 to 15 minutes and back. I request CA Ganesh Prabhu Balakumar to please come on the dais. He is going to speak on GST. I request CA Anand Kumar to kindly come and honor him with a shawl. Thank you, Anand Kumar. Let me introduce CA Ganesh Prabhu. He is a partner in CRBS and Associates LLP, Chartered Accountants. As partner specializing in GST and indirect taxes for more than a decade and heading the compliance, advisory and litigation practice of the firm. As a counsel, he has represented clients and various cases before customs, excise, service tax, appellate tribunal, sales tax, appellate tribunal, commissioners and other adjudicating authorities of GST, customs and indirect taxes. He advises various organizations and clients across verticals such as manufacturing, construction, transportation, entertainment, real estate, which is our topic for today, retail trade, automobile, educational institutions, charitable and religious institutions, hospitality industry, EPC contracts, information technology, business consulting, etc. As a resource person in GST and indirect taxes, he has been a faculty member and he has extensively toured to several parts of India to give guest lectures to members, finance professionals and students in GST during the days prior to implementation of GST, and being the master trainer on GST affiliated by Institute of CA till date has made more than 350 plus physical plus 150 virtual presentations and trained more than 15,000 professional and 30,000 students and other members in GST at various seminars, meetings workshops and conferences. He has presented papers in GST and indirect taxation on various branches of ICAI and in various business organizations such as CII, FICCI, MMA, KMA and other chambers of commerce, and apart from professional organizations such as All India Federation of Tax Practitioners, Bombay Chartered Accountants Society and various CA forums such as CA Study Circle, Society of Auditors, Association of Chartered Accountants and International Chamber of GST Professionals, etc. He is a resource person in ICT Academy, which is an initiative of Government of India and other states. Also a most sought after trainer in various government training organizations such as National Academy of Customs, Indirect Taxes and Narcotics, CGST Department, SGST Department, Regional Training Institute, that is the AG's office, Commercial Tax Staff Training Institute of Tamil Nadu, which trains government officers. As a member of GST study group of ICAI, he contributed to the development of background material on GST law, handbook on annual return, and technical guide on GST audit, developed by GST and Indirect Tax Committee of ICAI. A member of the Governing Council, he was the immediate past president of International Chamber of GST Professionals, an association dedicated exclusively on GST and indirect taxes. He regularly writes articles in reputed financial dailies and magazines, and he has participated in various shows and debates on TV. He has won first place in the All India 5th quiz competition for ICAI students conducted by ICAI. She is all yours.
A very warm welcome to all the senior members present here. It's indeed a proud privilege moment to be part of various initiatives of SIRC. This time on a day-long seminar, more precisely on RERA, where that too, which has been given me on my own area, which is on GST. Before me getting into it, please understand, on a last session of a day-long seminar, still 70% of the crowd is there means, then the subject is more interesting. You have to appreciate it. Why? We have read RERA, we have read IT, we have read Ind AS, we have read accounting standard. Differing law, including GST, has differing requirements need to be satisfied. And the best part, always I will say, apart from all the industries, construction industry is a beautiful industry because nothing will tally with anything. It is not that this will tally with other industries, at least we will have one direction mismatch. At least income tax and GST alone will have a differing requirement. I'll have a financial statement which will be tallying with my income tax, somehow I will mismatch accounting standard AS and read along with AS7 or accounting Ind AS, accordingly necessary Ind AS, including my construction standards of income tax, somehow I will match. Now coming back to this law, for the purpose of RERA, for drawing my money, my completion percentage is different. For the purpose of revenue recognition in my books of account, my same completion percentage is different for the same project. And all together when I come to GST, no, that fellow, he said, he has even never paid me money. How I will say it is completed? Now, please bear in mind, don't expect a single answer from me, at least standing in this podium. Okay. Where all you also have doubt, there all I also have doubt. It doesn't mean just because I've been privileged to have the opportunity to stand before you and share what small knowledge I have on this particular topic. There is no great difference. I also have. But only thing is, now as on date, I have 7 answers. I give the client. See, sir, Mr. Ganesh, how come you can have a 7 answer? Correct answer is only 1. But assessee is not interested in that answer. Please appreciate it. Now, in fact, with due respect, pardon my French, that is what he often says me. Okay, you don't come for this. You are comfortable with this number? Pay.
No, I will not pay on this. My land is more. I will exclude this. Maybe over the next maximum 25 to 30 minutes, I'll run through and conclude my presentation. Little elaborate presentation. Many areas is known to you. Nothing is, mark my word, this law is almost, I personally feel, is getting settled. Unless and otherwise in the next council meeting, which we are expecting some changes on this law. Okay. Because whenever we feel something is getting settled, we will unsettle it. The whole idea is settling to unsettling. So only then the learning curve for the professional will be good. Okay. And the learning curve for the professional, earning curve I am not debating. Okay. You decide by yourself. The learning curve has to be good is the intention of the lawmakers. But in any case, keeping all this discussion aside, now to move forward in connection with what are we going to discuss, we will touch upon some of the important definitions. I will not bore you with those definitions, but RERA. What are some of the definitions that we have under RERA? Same definitions are being brought in over here in the GST also, more precisely from the amendments that are made from 1/4/2019. Many words that have been brought in from the erstwhile law. Now, coming back over here. Before getting into those aspects, definitions, liability, place of supply, time of supply, GST related valuation, all that stuff including rate of tax. What if a person who is going to be in the flat promotion has to pay tax to the government? In fact, often I see these are the 10 liabilities that are before him. 10 liabilities are, yes. When he sells the flat, on the flat he has to pay GST. Now, if the flat that he is going to sell, if he has signed that flat on a joint development agreement basis, on the joint development agreement there are two liabilities, which is going to be, there is a transfer of development right from the landowner to the promoter. For that the promoter has to pay GST. Plus, for the flats given by the promoter to the landowner, for that also promoter has to pay GST. No, that fellow has to pay. No, that fellow has to pay. He will say, Pata nahi hai, I will not give you. You have responsible, you have to pay GST. Or that is how the industry is settling for it. Moving forward from all this, I have to buy goods 80% from registered person. On that I have to pay GST. Plus I will engage advocate, I will engage labor, I will have one property on rent, I will have a security for each project. For all this I have to pay GST. On top of all this, my customer will come out and say, what villa you are building? That fellow is building a Spanish villa. As if what? Daily this fellow goes to Spain. So now what I have to do? At least for the purpose of advertisement, I have to engage one foreign client who is a Spanish architect. Okay. Now if I engage that fellow, import of service, on that also I have to pay reverse charge. So that is also there on me. On top of it, if I buy all the inward supply of materials, I have to pay GST. If I buy cement from unregistered person, I have to pay GST. If I buy capital goods from unregistered person, I have to pay GST. Now on top of all this paying it, still I have to be making profit. After reading this notification thoroughly, I honestly have an opinion on joint development and all, you are making profit, huh? I ask this question every builder, mark my word. See, forget for a minute, exclude all these big builders. To me, somebody who is going to do a project size, per project size more than 10 crore rupees, they are all big builders. Anybody who is going to do the 6 flats, 8 flats, 10 flats, 12 flats, all are, mark my word, better go and do contract job. You will make profit. If you do this job, I am sorry, over a period of time, you will feel, what am I doing here? Okay. Now, with this background, I do agree, this is not a very positive background that I have said. But mark my word, this is what is the background. Now, with all this background, our fellow has to make profit and pay fees for us, which is more important for all of us. Now, any case, coming back here, getting into some of the important definition, apart from the word promoter, apart from the word apartment, which will include commercial apartment, residential apartment, and affordable residential apartment, where the affordable residential apartment is defined under the GST. That somebody from whom I am going to identify, where the flat size is going to be 60 square meter or 90 square meter based on the area, plus I have to what, sell it at what? 45 lakhs. In Chennai, it will never happen. 45 lakhs and all. Okay, single BHK we will give. Who will buy? You will give. Who will buy? That is something more important here. Now, if in case somebody is there to buy, again if you got 45 lakhs, if it is there, then okay, you can still call it as an affordable residential apartment for the purpose of taxation purposes. Followed by two important words. Real estate project. That would have been already defined under RERA. I am not stepping into it. Residential real estate project is a carvation of GST, where the carpet area of the project is going to be having, my carpet area of the project is less than 20% commercial. So in other words, my commercial carpet area in a project is going to be less than 20%, then my project would be called as a residential real estate project. So henceforth, all that I am going to use two terminologies, REP and RREP. This REP and RREP followed by CA, RA, that is commercial apartment, residential apartment and affordable residential apartment, will be repeating and banging on us in terms of the rate of tax decisions. Now, setting the stone, carpet area means, again, see, being a chartered accountant, everything we will doubt. And any word is there, every word has to be different. Again, the word carpet area means, go and refer RERA. Now, problem with RERA is, my staircase will not be counted in the square feet calculations. My common areas will not be calculated in the square feet calculation. For example, my balcony will not be concluded in the square feet calculation. So that 60 square meter or 90 square meter has to be from RERA 60 square meter and RERA 90 square meter, not by saleable area 60 or 90 square meter. So will there be a difference? Yes, there will be a difference. In other words, I would say backside balcony, if a flat is being sold to a customer, the customer comes and says, sir, here and all, I don't want balcony, you raise a wall and close it, sir, I'll use the extended room. At least my room will be extended, at least my hall will be a little extended hall. Good. The moment he closes it, he moves away from what? Affordable residential apartment to residential apartment, which means my rate of tax will move from what? 1% to 5%. Comfortably, you can do all services. One service you should not do is construction service. Why? Because the building you construct and keep will stand for next 25 years minimum. Officer after 4 years also will come and what? Summon the respective jurisdiction person and say, this balcony he himself has built or you did it independently. Our fellows, no, nice customers. On that day itself we have did, sir. What, after 5 years? I'll get a 74 notice under suppression. Now, mark my word, all this is starting in a very small way. In terms of small projects where we have enjoyed certain exemptions that is there in the GST rate, which was there prior to 18/7/22. The rate of tax for me for a single residential house, if I do with material, used to be 12%. And when I did that, officer come and inspect. No. I went and inspected. What smartness? I have submitted all the details. Post that he goes and does an inspection on a Saturday without even obtaining permission formally from his superior. Shows me a photo. No. I went. It was a 2-building apartment. Yes, sir. First building only I constructed. Second building he constructed by himself. No. I inquired that builder, buyer. Both you only constructed, he told. Okay. You summon him, he will say. Now, why I want to appreciate all this aspect is, it is a building that will stand for next 25 years. It cannot be faded. It is not a consultancy service. It is not a professional service. It is not something we do on software. It is not something, like all other services has its own differences. This service is different in its nature. Having set the tone in connection with all this, straight away, me getting into the general understanding of this supply. So, we had a very simple understanding of the term supply, sale, barter, exchange, lease, license. I am not bothered about all these words. That last one word, which is a killing word, barter, where this industry is getting suffered only because of that term called as barter, where I do something to you and you do something to me, naturally it becomes a term supply. Just for that purpose of verification alone I pasted it. But for section 7 is no way relevant over here for us. All of us would agree. But again, in case some of us, no, I paid a landowner share, I paid. Correct. For the services provided by you to the landowner, it is taken care. For the services provided by the landowner to you, the landowner is not providing service, he is giving only land. Correct. Is he gives land or is he giving development right of land? It's a clean subject matter of dispute by reading three important laws which used to be Transfer of Property Act, Indian Registration Act and Indian Stamp Act, and understanding the word transfer in its deepest way, we will be concluding that yes, the landowner is not transferring the land to me. The landowner transfer a development right in the land through the registered or unregistered joint development agreement, because some states, for example, to what understanding that I have been given, a state like Karnataka, a state like Andhra Pradesh, my joint development agreement has to be registered, whereas a state like Tamil Nadu, it is not mandatory. If you wish to register your joint development agreement, very well you can register. But is it mandatory? The answer is as on date, it is not becoming mandatory in connection with it. Why all this becomes relevant? There we will be saying, now we will construct so many flats, this is the land power that I give and other party will enjoy. All that comes into place, which means cleanly data is available with the government. Coming back over here, apart from the said services in connection with, in general, in connection with construction services, we have something called as the works contract services, which comes out and say, which is main set for this construction services. Often I would feel works contract is a larger set on this industry, and one subset, specific subset used to be construction services. As simple as that, real estate sector is so wide that one limb of real estate sector is residential real estate project or a real estate project. Because the works contract terminology is so wide enough, it would bring every other immovable property under creation into its ambit and its taxability associated with it. As on date, we don't need to be much bothered about it. Almost all services of works contract or construction services are going to be brought into the 18% GST as against the earlier different rate of taxes. Can I enjoy some benefits as per the law? As far as this law is concerned, or from this sector is concerned, as a sector itself, as on date, there are only two exceptions. One, I would put all my money, construct a property and sell that property after obtaining completion certificate. Why might as well I have to do all this? I'll put all that money in the share market. Better. Now, if I do all this, then I am not liable to pay what? GST. That is the only exception that we have. And the only exemption you will have in connection with this is when we go to the last fact, if I am going to do a single house, only labor services. Not even a single rupee of material has to be supplied by me. Where if I am going to be involved in a pure labor services of a single residential unit, then yes, I would be entitled, but for which we don't have any exceptions or exemption associated with it. In case if some of the clients have completed the project, be little conscious. Is it an outright purchase? Let me repeat, it's an outright purchase of land and they have completed everything and now they are selling. Yes, it's advisable, it's better and it is very right to opt under this route, where I can sell all my properties after obtaining completion certificate. In all other contexts, it has its own challenges associated with it. Quickly getting into the issues in connection with place of supply, very comfortable area. Location of immovable property is going to be place of supply. Are there any difficulties? No, not at all. The moment there is going to be some sort of a civil work that is going to happen, then each place where the civil work is happening, that is going to be the place of supply. In case if I am going to engage some consultants, some technocrats from foreign country for the purpose of this project, even in that circumstances, the place where the property is located or the section is very clear, be it the services in connection with domestic services that are being sourced, or in case if we are going to source any international services from foreign country. In all that circumstances, the place where the immovable property is intended to be located, that would also be considered as place of supply. Quickly on to the aspects of time of supply related matter. Many are times today agreements are very, to the extent possible, many organizations standardize their agreement on completion of this level you have to pay so much, that level you have to pay so much. There is a payment standard schedule in connection with the agreement. If there are due dates that are mentioned in the agreement, each trigger point for the due date, that would trigger its time of supply. The moment, no doubt all these services would come under a category called as continuous supply of services under GST, and the term continuous supply of services is defined where any service is provided continuously under contract for a period of more than 3 months, then yes, it would be called as a continuous supply of service. On that context, if I have a milestone for achievement, and each milestone that I achieve will become the time of supply, which means technically for the purpose of RERA, if I am going to issue a certificate saying that 45% of my work is over, so kindly release my 45% payment, which means please be very clear, as per the payment schedule, to up to 45%, I should raise invoices or demand letters to my client and collect the associated money. So there cannot be two divided views in connection with time of supply and for the purpose of applicability of RERA related compliances. No, we don't have any formal agreement in connection with this. In those circumstances alone, the time at which they receive the payment, that would become the time of supply. Quickly getting into the rate of tax related issues. As far as the rate of tax related issues is concerned, as on date, we don't have a very great difficulty. Earlier, one point in time, there used to be a 5%, there used to be a 12%, there used to be a 18%. All rates coming in over here, including one special rate of 1%. As on date, everything gets crystallized at a two segmentation level. Is it something to do with flat promotion, FLAT flat promotion, or it is other than flat promotion? Or in other words, if a person is involved in REP or RREP, residential real estate project or real estate project, then his rate of tax is treated differently. Any person other than REP and RREP, his rate of tax is going to be flat 18%. This is one of the easiest model that we have brought in. Exceptions are somebody who is going to do a works contract of oil exploration. Exception is going to be somebody who is going to do certain specific work in connection with the government, but for which government, non-government, private, third party, big builder, or I am doing to a small builder, or I do it to an individual contractor, single house, this, that. Almost everything is aligned up at a particular flat rate of 18%. Coming back towards the REP and RREP segregation, three broader classification. Residential apartment rate of tax, effective rate of tax is going to be 5%. Now, what do you mean by effective rate of tax? Then what is the original rate of tax? 7.5%. 3.75 CGST plus 3.75 SGST, which make my 7.5%, and there is an explanation in the notification which comes out and says, if you are not in a position to know your land value, then it is deemed the value of land is 1/3 of the gross amount charged. Just to overcome the apex court decision in the case of Sunil Kumar Bansal, this explanation is inserted. In spite of Sunil Kumar Bansal, now later we had a customs decision in connection with Wipro, the apex court decision, which said that you cannot come up with some deeming numbers when actual numbers are available. Exactly placing reliance on the 2018 apex court decision on Wipro Industries Limited customs case law, we have the latest decision of the Gujarat High Court in the case of the Manjulal Munish Bhai Bhatt, where it is being clarified that if you know the actual value of land, then go and reduce the actual value of land. Now, very simple. If I do all this, then my jurisdiction officer will say, boss, that decision is given for Gujarat. You are in Tamil Nadu. It is not applicable. Now I have to go and explain to him. Then boss, until my jurisdictional high court comes up with a contrary decision, this decision would be applicable. You have to have the principles of jurisdiction being applied in this way. Now again, let me repeat it. Do I need to subscribe to this view or not? I leave it to you at an independent count. But SME builder, small builder, please leave it. I have 142 apartments. That fellow can bear this dispute. Even otherwise, some dispute I will have. Let this also be one dispute. That's all. Any case we decide. Please understand. construction without dispute and all is over ambitious. Okay. In construction, if you have a construction like, definitely there should be every year at least 2 show cause notice. If it is not pending, then he is not a construction client. I'm sorry. At least 1 show cause notice for every year. No, I have everything clean for my construction company. Please understand, last 5 years he is filing nil return. Why is so much is involved in its rate? If it is an affordable residential home, it is going to be an effective rate of 1%, that is 0.75, resulting in 1.5. On that 1.5, 1/3 deduction if I am going to give the value of land, my effective rate of tax is going to be 1%. Same in the case of if someone is going to do a commercial construction, only then my rate is going to be 9, 9, 18, again 1/3 deduction. It comes up to an effective rate of tax of 12%. Now, let me repeat it. This is the rate of tax that they have made it very clear. But again, the latest development on all this is, do I need to go by the actual value of land or 1/3 value of land? At least I am not very sure from Karnataka or Andhra Pradesh or Kerala perspective, because all these places we have a reckoner rate in connection with land, whereas when it comes to Tamil Nadu, we have an undivided share of land till January 24. 1st January 24, why I alone has been little different. I will also go join the club of all 29 states. Because this was the only fellow who is what? Registering land and building separately. No, why I should be aloof? I will also go and join the club. So now what? Now everybody is in the same club. Now, at least only one advantage is, will I be able to know what is the guideline value and can I exclude it? Yes, possible, but again, as I told, it will be a little litigious view. If the assessee is little interested in terms of its application, yes, a good point. And again, it has to be argued little cutthroat in terms of before the earlier level. So that sums up the effective rate of tax in connection with the construction services. There is nothing much in connection with this, except for commercial apartment services. Nowhere ITC is going to be enjoyed. Every places we are going to block water, the input tax credit. So fellow is not also eligible for ITC, and I have to pay for RCM, I have to pay for a shortfall tax, and on all top of it, I have to comply with everything. Now, some interesting question that arises, if somebody very carefully read the notification 3 of 2019, which goes and amend the notification 11 of 2017 in connection with its rate of tax. Is my scheme of opting 5% and 1%, is it optional or is it mandatory? Will be a clean subject matter of litigation. And it is a very serious litigation which is going to be, because a notification can recommend a rate of tax. A notification cannot mandate a rate of tax. The point that we want to drive home over here is becoming with the recommendations, for which we have to go back to section 9, we have to go back to section 5 of IGST Act, read through the 9 subsection 1 and 5 subsection 1, appreciate the phraseology that is being placed over here, and then come back to this particular notification. When he is being referring, he would very comfortably come out and say, I would be exempting the balance portion itself. Now, those are very, very serious disputes. Will these disputes will survive? Individual calls organizations can take. If they have some of the larger organizations in Chennai who does a few crores of project, they are positioning themselves, no, I would pay 18% GST, claim ITC, highly litigious and aggressive view. At times in GST, we should have that alpha attitude. If we are going to go on a little surrender mode to GST and all, that's all. GST will close it off. This is what at least GST taught me. Because I would be going and saying my client, no, yeah, file return, and he will file return with late fee. Immediately I will have amnesty scheme saying what? No, wait. Now, having recommended all this, he will forward me that message. Because WhatsApp University is on. Okay, the WhatsApp University will spread everything. And he will forward me. You only told me to file. That too, I have been affected in the most worst case was, there were 2 brothers doing business independently. For the elder one, I asked him to pay everything and he filed. By the time next 2-3 days I was not available and the younger one came. By the time younger one came, this fellow also issued notification. I don't know, this both guys goes early morning walk together. And in the early morning walk, GST will be the subject matter of discussion. On top of GST, late fee which they pay will also be the subject matter of discussion. I was absolutely not aware. And very interesting note, that fellow calls me at morning 8:20 and said, இப்படி பண்ணலாமா சார், அண்ணனுக்கு மட்டும் சரி தம்பிக்கு மட்டும் காப்பாத்திட்டீங்க, என்ன கட்ட வச்சிட்டீங்க பாத்தீங்களா அப்படின்னா. நான் என்ன வேணும்ட்டு என்னடா பண்றேன், எனக்கு என்ன தெரியுமா சார், உங்களுக்கு எவ்வளவு தெரியும் எனக்கு. What I know, maybe I know on the subject, whether tomorrow morning a notification will come. Exactly, some of karma theory will operate in the same way. The brother and the elder one and the younger one had a GST department audit. This time the younger one GST department officer was little pressing us and asking us to pay the tax immediately, interest late fee, otherwise emission notice, I told him, you get the notice here. Being a builder, getting notice and all is not. It's normal. You take notice. No, sir, we will pay. He paid the tax for RCM, interest for RCM, penalty for RCM, 15%. And awarded everything. 1 week later, amnesty scheme came, 50 cops. This time I called the brother. Thambi kattirka, neenga kattla, poduma. This time cost is also little on the higher side. This fellow paid 8.45 lakhs as interest and penalty. Now why we want to appreciate over here is, and I don't know sir, we can get refund. 128A subsection 3, very clear. If you have paid it, it will not come. Beautiful metaphor we have in Tamil. Yana vaila pona karumbella velliya varadu. Something goes into the mouth of the elephant, that's all, done and dusted. It will not come. Now, why we want to press upon all this is coming back over here. In terms of advising the clients, we have so much challenges associated with it. And on the applicability, yes, it is going to be a little very serious view on its aspect. Quickly getting into valuation, I don't have nothing much to press, but all that I want to say over here is whatever money the landowner, the flat promoter is going to obtain, the entire money is going to be covered as the value of supply. Now, by whatever name called, that is so beautiful section 15 subsection 2 clause C, any money collected by the supplier for anything done. See, one any itself you can't manage. Now, any money collected by the supplier for anything done. In fact, when on the demonetization case, the former finance minister P. Chidambaram used to argue before the Constitution bench for 4.5 hours on section 26 of the RBI Act. Now, I have been, when his arguments are over 1 week, I have been, during all my lunch hours, I used to see this. Suddenly, my senior partner got annoyed. Oh, why you are seeing all this stuff and all here? No, sir. He is arguing on section 26. Please understand. Section 26, his line of arguments is, any notes can be demonetized. Whether any includes all. What's his argument? Now, at the end of 16 places I have any in section 16. That any, this any is any. I have very interestingly argued, the former president who just got retired, Chief Justice Chandrachud, he has his own style. Exactly without touching that point, he passed the judgment. People who have been waiting for safari retreat for the last 14 months, like 14 years, Vanavasa Ram had. Okay, we have been waiting for the answer. If it is a plant, you claim credit. What is plant? You never ask. What you ask? Am I entitled to credit on this item or not? If it is a plant, you take credit. Okay, sir. What is plant? No, that is a functionality test. You go and do a functionality test. Now, every building I have to test whether it is plant or non-plant, and then do. Now, why you want to appreciate it? It is going to be a never-ending saga in some of these matters. And keeping that in mind, when I collect money for, let's say, water charges, water connection separately, EB connection separately, or car parking separately, or very recently, preferential area location separately, thank God we have a clarification. Otherwise, fellow used to say 18% GST. Because it is some of the agreements of high-rise building, we all will know. After 14th floor, every floor, 200 rupees extra per square feet. I used to ask the builder, why 200 rupees extra? You breathe good air, no? Every fellow breathes contaminated air. Beyond 14th floor, you are breathing good air. Balcony, fresh air varudilla. Idiklama 200 extra. Yes, idiklena edu Ganesh. That house alone, why you are costing 2 lakh rupees extra? Beach side view. Not every day, on Sunday you open the balcony, you will see beach. As if the beach is there. Beach is 4 kilometers away. But again, points for our discussion is, will it form part of the composite supply? Was the larger question we have been pressing. Yes. Now this left us with only one question that need to be answered in that circular. Car parking. Am I purchasing the immovable property or am I purchasing a right to park? Can you able to appreciate this discussion? This question, let them keep some point we have to dispute now. For that purposes they have. But again, I am expecting one more circular. Car parking will form part of composite supply. When preferential location charges itself forms part of composite supply, when we have a circular that clarifies, this will also come. Now coming back here, very popularly called as pista additions, whatever I am going to collect, any money which is going to be, all this will form part of it. Of course, if I have land, I have to reduce the value of land. Again, we have this actual value of land, can it be reduced or not, all that are points which are all on. We don't have any second thought associated with it. Quickly moving forward in connection with input tax credit, as long as I am going to do a residential real estate project, then I will not be entitled for any input tax credit. Alternatively, if I am going to be involved in a real estate project where there is going to be a commercial apartment, yes, my ITC will be intact and I would be entitled to claim credit of, be it works contract or all those goods or services that are going to be used by me. In case if it is going to be a real estate project, then the real challenge for the real estate project is going to be on the reversals of ITC. How am I going to reverse? Now very interesting to note, first 5 floors is going to be mall, 6th floor to 13th floor is going to be, the 6th floor to 21st floor, it is going to be residential, and in the mall, I will not give just the right to use of it, half portion of the mall I will sell to a fellow, that fellow will in turn sign up a revenue sharing agreement with the theatre owner or somebody who is going to convert it as theatre. Life and all will be beautiful if we have somebody coming into place on all this. And very interesting to note, whatever all I told, all will happen within the family through different companies. So which means we will also have what? Related party disputes on. In that context, yes, it is going to be seriously fun. But again, but for commercial apartments, nothing is going to be entitled for it. No, we are going to construct, we are going to have it ourselves, and then we are going to give it only on right to use basis. I don't think so. There is no charm in terms of accumulating the credit. Of course, on certain items they can claim credit, but some of the items straight away reversals are going to be operated based on Rule 42 and Rule 43. I am not stepping it, but again, it is going to be on not value. Henceforth, it is going to be only on the carpet area of the respective places. Quickly getting into last maybe 5 minutes of your time on joint development agreement. This is one nice model, no doubt about it, where it is a win-win for both. But who is winning was only question mark. It's for a landowner also it's a win, builder also it's a win, no doubt. But who is winning? Now it's a landowner, builder or government. Oh, for what we do, at times we have our own doubts. Very popular models are area sharing model and revenue sharing model. And of late we have the hybrid which comes in both. There is going to be an area sharing. In spite of that, I will also give what? Free money. Now that free money when I am going to give on day 1 or day last is going to be a multi-million-dollar question. And what is going to be the TDS for it? Whether I have to deduct 194 IC, all that. So again, when I have to deduct, when I have to create the payable, when I have to account for purchase of land, all issues are on. In terms of accounting, income tax, all. Now when it comes to GST, all that I have is just broadly the 6 areas to take care of it. the organization is going to sign a joint development agreement where the landowner is going to be given land, as well as, landowner just relinquishes right on the land, where the builder is going to construct the building on it. Few flats are going to be shared to the landowner and few flats are going to be sold by the promoter. For the flats sold by the promoter is happy, he is going to collect from the third party buyers taxes and pay, provided he sell all before what? Obtaining completion certificate. Life should never be simple. We will say 2 flats before CC, 1 flat what? After CC. Now, let that be in that way itself. We'll come this side. Landowner, he is going to keep all the 3 flats. Life is beautiful again. But landowner already has 30 flats. Now, why he will keep these 3 flats? He wants to sell all the 3. Now, here comes. Now, will he be entitled to claim ITC? The interesting answer is yes. He is entitled to claim ITC, which means he can collect from his promoter the necessary taxes and pass on that to the respective whatever taxes he collects from the third party buyer. Yes. No, I will sell only everything because only then my income tax, it will be convenient to me. I'll go only after completion, only I will sell everything. Then very simple, after completion, no GST, matter ends there. Now, coming back to the promoter's angle once again. He, apart from this, has to pay 2 taxes. For the flats given by the promoter to the landowner, technically, landowner should pay GST to whom? Promoter. But never in the builder's lifetime it will happen. No, if it happens, life is beautiful. That's all. It never happens. It's very, very tough. Very rarely it happens. In any case, that has to be paid. Now, first fundamental question that was raised was, what is going to be the value of this? Very interesting. Now, we have an explanation. It simply clarifies similar value of flat sold. I sold my flat, which is in 2nd floor, 1st flat for 1 crore rupees. And the flat that I have given to the landowner is on 1st floor, 1st flat or 3rd floor, 1st flat. Why I am referring it is today all these are all mirrored flats. Today almost every building is a mirror building because how your ground floor is or the 1st floor is same, they make the water. 2nd floor for 1,000 reasons it is same. Why? I'll have the plumbing same, I'll have the windows which has been made same, I'll have the doors being same, say structural diagram is same. In fact, it is easy for them to complete it in that way and package it in that way, including everything. Now, because of that reason, when I have sold my 2nd floor 1st flat for 1 crore rupees, I am now forced to take up that 1 crore as the value, and on that 1 crore, next issue comes up. Do I need to pay GST 5% or do I need to pay GST what? 18%. Let me repeat. The day in which we referred everything to RERA, it is only residential apartment or apartment, as simple as that. I am forced to pay 5%. If I pay 5%, which is 5 lakh rupees, I will never make money in joint development agreement. But this is what? Law. Practice. On 1 crore, 1/3 I will reduce. Why you are reducing? No. You only told land value. Land is already with you. I am only giving what? Building. So on 70 lakhs, I will pay what? 5%. Okay. One fellow will come out. No. My construction cost is just what? 3,000 rupees. On 3,000 into number of square feet, I will get one value. On that, I will pay 18%. See, look at the variety. Now, one fellow will say, on that 3,000 into flat, I will pay 5% is one model. 3,000 into flat, I will pay 18% model. Where are you getting all these answers and all? Please note WhatsApp University. What is right? Only one is right. But is it fair? Please don't ask me. It is not fair. But unfortunately, the bitter fact is this. Do I need to pay that value? Yes. That is how it is. Do I have a dispute here? Yes, we have a dispute. Will we seriously have a valuation dispute? I personally feel there is a valuation dispute here. It cannot be. The way in which I treat a third party buyer and the way in which I treat a landowner buyer is not same. It's different. But my hands are tied. I don't have a similar value to be compared. In fact, I have doubts on the fair market value definition itself there. It is not same. The way in which I treat a third party buyer and the way in which I treat a landowner is not same. Somehow organizations has to comply. Whether they are going to pay on the similar flat value or they are going to arrive some value and pay, come what may, they have to pay some value. Let them pay first. If they don't pay, then section 74 suppression, this, that, everything will get involved. At least if I pay, I reduce the tenor of the dispute to a little lower level. Now, why these discussions gains its momentum is only one or two reasons. On that first reason, I'm sure everybody who practices the law of income tax will appreciate it. If there is a motor vehicle used by a professional for both commercial and personal purposes, we disallow a portion for personal purpose. Now, tomorrow if even an officer identifies this, we disallow it. Maybe we at times disallow 15%, at times we disallow 50%. 15 or 50 is based on the discretion of the person. But I have disallowed some portion. Now tomorrow if an officer wants to invoke penalty, then we will simply say, please understand, I have complied with the law. Now what is in dispute between you and me is only what? Valuation. The percentage, the quantum. Now all that I am recommending is that's all. Quantum, it's your wisdom. Okay. Do I need to pay on the landowner's share as a builder? The answer is a very simple. Now, will I take up the first square feet that is registered, or will I take up the average, will I take up the similar flat, or I am going to go, no. I will go cost plus 10%. You go whatever methods you want. I don't want to stop your creativity. You can go on except for one method which has been prescribed there. There are no other aspects. In case of transfer of development right also, we have the same issue. The one flat which is being sold after obtaining completion certificate, I run the same problem. The same problem being here is value of similar flat. Boss, that fellow is giving me development rate. I am going to give what? Flat to this fellow. Now, how this and that value can be same? Logically is right. But please note, there are few basic questions which are all pending on this topic. When my landowner transfer every right in the property, when we go back and read some of the 1980s Apex Court decision on this, we have a concept called as profit appendant, by which every single right I transfer, it is as good as sale of properties. Now, in this context, where is the question of development right steps in? But again, these are all larger questions which need to be raised at the High Courts and the Apex Court. At an officer level, at a quasi-judicial authority, we will be having our own set of disputes associated over it. Again, in terms of the revenue sharing, where the revenue is being shared to the respective landowner on a revenue sharing basis, necessary TDS will be deducted and paid. It's more of a transaction in money. It cannot be treated as a supply per se. Again, for the entire value, already taxes are being charged. But again, on account of deduction of TDS associated with it, there are issues that are being raised by the jurisdictions in connection with applicability on this. These are all my points in connection with applicability of it. Reverse charge, we have already discussed. There is going to be a shortfall tax reverse charge in connection with 80% sourcing the goods from a registered person. Never in a lifetime a builder can source 80% goods from registered person. No. If a builder says, no, I take all my goods from registered person, please understand, he has subcontracted the substantial portion of the work to another fellow. It is as simple as that. I have taken the work, I have outsourced to another fellow will be responsible for it. Now, this is the only model that we have, but for which, if it is a vanilla promoter who is going to build the product, then at no stretch of imagination, he can achieve this unregistered person 80%. Sourcing cement, sourcing capital goods, all that is okay. That all is from a registered person perspective is possible. Do we have exemption? Yes, as I earlier mentioned in the initial itself, only one exemption. Look at that word link. Pure service. Where are all these words? These fellows are all searching. We have to wait and watch. Pure service, which means I should not even buy what? 1 rupee material. If the moment I buy and give him 1 rupee worth of material, it's going to be, I'll be out from the exemption, and it is going to be applicable only for a single residential unit. No, I am going to construct for one person only, but he will have 6 kitchens in, that is called as flat. No, owner one only. See, owner one, we never told owner one. We are very clear on our words. A single residential unit, many times a residential unit is referred by many of the town planning acts only through its kitchen. It's kitchen the criteria. Everything is kitchen. Hope you appreciate what I am trying to say. Everything is kitchen. See, anything will be calculated. How many kitchen is the question that will be again and again asked by everybody. Like, what is your project size? Equivalent to that, what is your, how many kitchens? 6 kitchens, then 6. So come back here. If it is going to be in that way, then that would be the case. Exceptionally, if somebody is going to construct for MIG, LIG in case of Pradhan Mantri Awas Yojana, or Housing for All Rural scheme in case of all this housing plans that are there, those people are going to be entitled for exemption on the works contract related aspect. So that sums up the broader discussions. Any questions? Yes, I would take it up because I have been very clearly advised by the program coordinator, give an open time for questions that need to be taken up because this is one area. To what extent it is available, time available, I will take up questions. Yes, sir.
Regarding the corporate guarantee.
Yes, sir.
Recently, this department has come out with a circular dated 26th October 2023.
Yes, sir.
That GST is payable, levy chargeable on the corporate guarantees or on the 1% of the value of the corporate guarantee.
Correct, sir.
Now, notices have been just like that issued that to levy the GST to be payable before 26th October from the date of inception, from the date of the giving the guarantee.
Correct.
So, this is how it is applicable, how this can be addressed.
Sir, corporate guarantee has its own challenges. That is the area by itself. To start with, broadly I will share my thoughts. There is a corporate guarantee given. Who is giving to whom? If it is going to be an Indian promoter, it's just 3 directors. The 3 directors guarantee the loan of which is taken from some of the banks in India. Of those loans are being guaranteed by these 3 directors for and on behalf of the company. If that so be the case, we have a circular which has been issued by RBI very clearly says the directors cannot take commission. That will come for the rescue that we have been fighting from initially. The problem here is there are corporate multinational company. We have a parent company, we have a subsidiary takes care of a particular activity, and that subsidiary company is being guaranteed by the holding company. In those circumstances, all this 1% would come into operations. Even applicability in case of this 1%, as long as both of them are entitled for input tax credit, full ITC, then value can be nil, 0, you can come out of this problem. What proviso that used to be existed in Rule 28 earlier, now after the corporate guarantee amendments, that is Rule 28, sub Rule 2, below that also we have the same proviso. So coming back here on a short pointer, is it a guarantee given by another company to this company, or it is a guarantee given by the director? Please verify that. If it is based on this, then your taxability will be decided accordingly.
If the guarantee is given by the one of the promoter, that is a shareholder,
to the
SPV.
To the SPV. Is he holding the shares in the SPV?
Yes, around 15%.
Then he will come out. He let him issue notices and all.
But
See, sir, he cannot stop that fellow. You can make the horse, take the horse to the pond only. You cannot push the horse to drink water. In spite of you give circular, you give apex code decision itself, sir. Some of our state government officials, with due respect to them, they will issue notice. This and all is not applicable to me. Bas, apex code decision. See, service, schedule 1 is there, para 2 is there, says what? Services provided between related person, distinct person, you are shareholder, director, related, applicable. Why he is bothered circular? Sir, circular is now, sir. I am demanding for 1920. Then I have to go him give 8 decisions of the apex code saying that circulars are retrospective in nature, it is clarificatory in nature. So what? He'll ask. So what? Boss, you are not supposed to charge. It will be like this. So don't expect everybody to become at our level of understanding. If all of them have our level of understanding, then we will not have issues at all. So it will take its own time. Do you expect? You can press at the next level, give a detailed reply from the ground one. You can give a detailed reply explaining them, pressing them, because of late we face challenges at the first appellate level, and going forward we also foresee on the second appellate level when a few grounds are being not raised at the earlier level. We are finding it very difficult to press that at the next level. Why you have not raised this ground before the adjudicating authority was straight questions, but has been asked by some of the very smart commissioner appeals at the first appellate authority. So that would be the proposed view of it. Yes.
So what is the fate of the safari retreats case?
I told no, sir, functionality test. That's all. Sir, we are all very great. Sir, off late we became a very great fan of Kamala Hassan, sir. Pardon my friends again. நாங்க கடவுள் இருக்குன்னு சொல்லல, இல்லைன்னு சொல்லல. இருந்தா நல்லா இருக்குன்றோம். If your building is what? Plant. You take claim credit. No, my building is plant or not? Independent test. Whether acoustics facility like this is there or not, why you created a false railing, what is your soundproofing system, how you maintain some of the data center buildings. We have this refractory materials that have been used which will withstand 2.5 hours of fire heat. So I cannot equate that building with a regular vanilla building of a model. So those are the independent tests I have to do and then decide upon whether it is plant or machinery. Now again I have a dispute there. It is not plant and machinery. Plant or machinery. To that extent he is very clear. In spite of somebody bringing, no, that is a drafting error. What? When you draft section 17.5c, you will say plant and machinery. When you draft 17.5d, you will say plant or machinery. After 5 years later, you will come out and say me drafting error. They are very clear. We are not able to appreciate this as a drafting error in spite of the additional solicitor general relying on 3 foreign court decisions on this matter. This is a pure out and out drafting error he has relied on. This time also we had a very tough additional solicitor general. So that way some of it's good literature, 16 various decisions are being referred. But my view, we'll have this dispute which is answered. Yes.
One question on applicability to RCM on the charges levied by the planning authorities.
Yes, sir.
Statutory levies.
Statutory levies. In connection with statutory levies, I am of a view, though we have a general entry called as services provided by government to a business entity is liable to pay tax under reverse charge. We have a basic exemption entry which comes out and says services provided by government authority. And when we go back, at least to what extent I appreciate, for example, CMDA, which is the planning authority for Chennai in connection with almost all high-rise building, that fellow becomes a government authority. So services provided by him becomes exempted. So I am of a view that the said exemption will be applicable to me under the reverse charge perspective. So I would be out from the applicability in connection with payment of taxes. So on the, again, this is a little divided view. From a central government perspective, in GST department audit, central government officers by this point, because they have been used to this entry from service tax days, but unfortunately, all my state officers are trying to appreciate it, but they are no, government is providing service to you. No, government is. Sir, I deal with 21 departments. I don't deal with one department. If I'm going to construct a high-rise building, I'm going to deal with 21 departments, and every department charges me either a fees or a license fee or a service charge or some sort of a tax that I pay. Now, if you're going to come out and conclude me on all this, I have to pay. No, you pay and take credit. Sir, I will pay. When I take credit, I will be entitled to take credit only for 35% because only 35% is commercial area. Balance 65% is going to be my residential area. I will not be entitled to claim credit. So this is one dispute that we have in connection with it. So we have to be a little more careful over here. On services provided by them is getting exempted. So that exemption should be applied on reverse charge basis is my submission in connection with it. If there are no questions, I thank you all for effective and patient listening. Yes, sir.
Okay.
You have.
If you don't have any questions, one is if you're able to explain about the plotted development taxation.
Yes.
In 5-10 minutes.
Yes.
Okay, thank you.
In connection with, from a real estate perspective, am I right, sir?
Yes, yes.
From a real estate perspective. Now, this is on a little differential note in connection with where I go source 10-15 acres of land, and after identifying this 10-15 acres of land, I want a garden here, I want a mountain here, I want an artificial waterfall here, and followed by I want also plots which are all on different sizes. A villa plot, a normal regular plot, and all those affordable plots. When few lands are being sourced and being developed and sold, again, state to state it differs. As far as this particular state is concerned, they are very clear. Whatever money you receive, either you receive or you call it as what? Sale of land. And many times all this is sold on extent as sale of land. In spite of there are being many common facilities that are being developed, it is being considered as a mere sale of land. Why I am pressing this is not the model when we go back to Karnataka. This is not the model when we go back to Andhra Pradesh. As far as this particular state is concerned, I would have sold this land. Only for the land it is sold. They go back to Schedule 3, simply say, what I am selling is land. Land. It is out from the tax net. I am not liable to pay GST. But unfortunately, there are 2-3 versions started. As far as this particular state is concerned, there will be a marketing agency. There will be a fellow who sourced the land. There will be a fellow who is the landowner. Hope you appreciate it. Landowner will be at the lowest pedestal. I will have an agency who will come and develop everything, and I will have one more fellow whose only work is what? Marketing. Now, in this context, the marketing fellow will be liable to pay GST on his share. The fellow who develops, in some instances, in fact, of whatever I have seen, only in one circumstance alone, the developing company was also very clear, no, I will go and get the development charges collected, I will be registered with the respective state development authority. But technically speaking, the landowner's consideration and the developer's consideration, both will be subjected to the state stamp duty. Maybe the marketing charges will be out from the tax net, how they revenue share it, how they pay it is all the deciding factor. Can I go on some pure agent basis and exclude the value of land? Yes, possible. No doubts. Yes, that is possible. But again, it's based on the respective structure that has been adopted. No standard practices are being followed. But again, very recently, the enforcement wing of the state identified one of the developer who has developed in suburban and more precisely in the Salem, Dindigul, this district. Small square feet only he has developed, 4 lakh square feet only. For 4 lakh square feet, guideline value is 200 rupees. Promptly he has paid, collected 200 rupees, shown in income tax, shown in GST, never obtained GST registration itself. Straight away they came on section 67 power, stepped into his office. His customers were summoned. Every customer told, we have paid 1000 rupees to the landlord. He asked us to pay this company, that company, and every companies are getting summoned. So my humble submission is a conscious call has to be taken in connection with it. How the agreement is worded, what is the memorandum of understanding, everything need to be appreciated. I don't want every document to be registered here, but some sort of a thought process, a very clear thought process should go in connection with development of a land and subsequent sale of land. No, Mr. Ganesh, we sourced the land 4 acres, we have plotted it, we engaged it, we identified a fellow and asked to lay road, we engaged the surveyor, we marked it, we laid the stone, everything we did. On none of these items I have taken credit of it. Good. You sell it. Whatever you sold it, if it goes as an extent and you can still conclude it as what? It's a mere sale of a immovable property. You can walk out very comfortably in spite of contrary advance rulings that are there on this topic. I am of a view, it is a out and out say I developed it and then I sell it. But here where problem comes is to the extent of guideline value I will take in firm X. Anything beyond guideline value I will take in what? Firm Y, then firm Z, then firm alpha will come into play, then it will have its own challenges associated. This is again, we have to decide on how it is going to be happening at a transaction level. These are all my few thoughts. Thank you all for effective and patient listening. Thank you.
Thank you, Ganesh Prabhu sir, for a wonderful presentation on the GST and the real estate. I do agree that law and logic doesn't match always, which is both in an opposite direction. On behalf of SIRC of ICAI and also on behalf of the members present, I heartily thank for your wonderful presentation and made everybody interesting and attentive to your presentation. And we are concluding today's session on one-day seminar on the real estate. On behalf of SIRC, I thank you each one of you for being attentive and participative. I wish and hope that the session is made a difference to your knowledge and the wisdom. If not, you go with the same, at least some more confusions that you are carrying back. That's the perfect place to stand to have more confusion that leads us to more thinking and thought process. With this, I am concluding the session. Thank you and thank you very much.